OECD Conference Day 2 is about to start. For attendees who present at Hotel Indonesia Kempinski, Jakarta, kindly take your seats and be reminded to set your phones into silent mode. For those who attending by Zoom application, please keep your microphone muted during the conference. Before we begin, I would like to inform everyone that this conference is broadcasted live on YouTube Jasa Keuangan and will be available for post-conference viewing. Language interpreters for Bahasa Indonesia can be accessed from the Translate Language menu in Zoom application. If you have any questions for the speakers or presenters, please use the Q&A menu in Zoom application. Distinguished guest delegates, ladies and gentlemen, good afternoon and welcome to the second day of the OJK-OECD Conference on Financial Inclusion, Financial Consumer Protection and Financial Literacy in Asia and the Pacific, Friday, December 3rd, 2021. It's an honor for me. My name is Tiffany Raitama, and I will continue to be your master ceremony of today's event. This conference is a joint event of OJK-OECD to strengthen cooperation and develop high-quality financial education, aiming to explore global policy developments and share the perspectives on financial inclusion, consumer protection, literacy policies, best practices to support the well-being of consumers. From yesterday's conference, the session 1, we discussed the need for effective financial consumer protection frameworks to ensure responsible and fair treatment for consumers, especially those who may be vulnerable, and support financial inclusion. Then continue with the support of digital financial literacy for financial resilience during and after pandemic in session 2. To start our event this afternoon, we would like to inform you of the agenda today. There will be 2 panel discussions. Sessions 3, we will discuss a financial consumer perspective on COVID-19 measures, and the next session, session number 4, we will discuss about strengthening digital financial inclusion in the context of the pandemic for individuals and MSMEs. Ladies and gentlemen, now we come to session 3, our panel discussion this afternoon with the theme of a financial consumer perspective on COVID-19 measures that will be led by our moderator today, Ms. Flor Ann Messi, as Acting Deputy Director of the Directorate for Financial and Enterprise Affairs, OECD. This session, we will discuss about research findings that explore how the COVID-19 pandemic has impacted the personal financial situation of financial consumers in the Asia-Pacific region, especially here in Indonesia, Malaysia, and also Cambodia. Please welcome Ms. Flor Ann Messi. Okay, good afternoon, and good afternoon from Jakarta. How are you? It's really great having you here.
I am very good. Thank you. Good afternoon to you all in Asia, and good morning to some of you in Europe and elsewhere. It is my real pleasure to be moderating this third session of the conference, which, as you said, will really focus on financial consumer perspective on the COVID crisis. And as we've seen, we have 4 extremely good panelists with a lot of experience on those issues. So I will start with a few introductory remarks. Obviously, as we've seen, the session will actually pick up on the common themes of this conference, namely the importance of financial inclusion, financial consumer protection, and financial education to improve the financial well-being of consumers, the impacts, opportunities, and challenges of digitalization, I would say especially in Asian countries, the importance of increasing financial literacy, resilience, and inclusion. Last but not least, the importance of learning from the current pandemic and adapting so that we are better prepared to support financial consumers for future challenges. As we have heard in session 1, the pandemic has really emphasized the importance of supporting financial consumers through the COVID-19 pandemic. A range of measures were put in place by governments and financial service providers around the world to support consumers as they had to deal with the impact of job losses, reductions in income, the effects of lockdown on access to financial services, and a range of other issues. The panelists today will give us an overview of the measures that were implemented in their respective country to protect and support consumers and some of the issues that they saw as a result. The OECD has done extensive research on this topic via our networks and outreach to countries around the world. And you will hear about global insight and insight from the Asia-Pacific regions towards the end of this session with my colleagues Anna. In order to learn from the current pandemic, it is important to get a financial consumer perspective, particularly in relation to the measures put in place to support financial consumers. This is critical to learn for the next crisis, perhaps, and to better support financial resilience and well-being going forward. Therefore, the OECD will be conducting new research on consumers' experience of COVID-19 policy measures on financial consumer protection and financial education, and its relationship with consumers' financial resilience in 3 countries in Asia, Cambodia, Malaysia, and Indonesia. This session, therefore, will be an important input to this research. This research will be presented early next year in a particular webinar, and I would like again to thank the support of the government of Japan for this research, as well as for this conference. Now, of course, I would like to move to the panelists. As I mentioned at the beginning, we will have a lot of expertise, and we are really glad to have actually the 3 countries for which specific research will actually be developed by the OECD. So I will present them very, very shortly. But before I do that, as you mentioned, MC, each panelist will actually be providing a presentation that will focus on how the COVID-19 pandemic has impacted the personal financial situation and financial resilience of financial consumers in their particular jurisdiction. They will explore the range of financial consumer support measures that were available in their jurisdiction and offer their perspectives really on the policy measures and consumer experience. So again, I would like to present our 4 excellent panelists today. I'm very happy to have Deputy Governor Bank Negara Malaysia, Jessica Shu Shanglian, with us. Welcome, Jessica. Then Mr. Sarjito, who is Deputy Commissioner of Consumer Education and Protection at OJK Indonesia. Then Mr. Ang Bomakara, Deputy Director General and Banking Supervision at the Central Bank of Cambodia. And last but not least, for the OECD, Mrs. Hannah Dawson, who is Acting Head of Financial Consumer Protection at the OECD. With that, I would really like now to give the floor to Jessica first. Please bear in mind that we'll have time for Q&A at the end of the session. So do prepare your question. Jessica, the floor is all yours, and I understand you have some slides.
Yes, thank you very much, Florence. It's my great pleasure to be here with you. Can you hear me? I'm just doing an audio check.
Absolutely, Jessica. We
Thank you.
One-on-one, and we can see your presentation. That's perfect.
Okay, thank you very much. It's a great pleasure, as I said, to be here, and I'm also very much looking forward to hearing from my fellow panelists as well on their experiences with COVID-19 measures. So I'll share with you today how the health and economic crisis from COVID-19 has impacted financial consumers in Malaysia and our experience with the measures that we took. Can I have the first slide, please? It will probably come as no surprise to many that COVID-19 has had a disproportionate impact on certain segments of financial consumers. The Malaysian economy in 2020 contracted by 5.6%, with unemployment rates rising to 4.5%. And we went this year in the third quarter into a renewed nationwide lockdowns, which saw us dip into negative growth territory again. So economic activities have resumed since, and we do expect growth to continue on a recovery path in 2021 and 2022. That said, lower income and informal workers have suffered the brunt, a disproportionate brunt of these tough economic conditions. Now, these segments already had low financial buffers coming into the crisis. And while the lower income groups were main beneficiaries of government support during this period, such support does not always and at least does not fully reach the over 1.2 million informal workers in the country. Low levels of financial literacy also meant that many who were affected were very much less able to cope with their circumstances, with some also falling victim, unfortunately, to financial scams. Pre-existing vulnerabilities, and I should say inequalities as well, are also likely to have worsened. Median incomes for the lower and middle income segments have declined from pre-crisis levels, while that of the top 20 percentile of households have increased. The number of households with incomes of less than 2,500 ringgit, or the equivalent of $600 have increased by some 12.5%. Correspondingly, the share of Malaysians who save less than 500 ringgit, or $120, or not at all, has increased from 49% to 52%. Official data also point to a higher number of poor households and a higher incidence of absolute poverty. Low-skilled workers in the hard-hit services sectors, which were most affected by lockdown measures, have been really at the sharp edge of the sword in terms of the risk of losing their jobs, whether temporarily or permanently. Over a third of jobs are in the services sector in Malaysia, and of this, more than half are in the accommodation, food and beverage, and wholesale and retail trade. Since 2019, there's been a general and steady decline in demand for low-skilled jobs. Demand for low-skilled jobs are now about 5% lower than before the crisis, and they did fall more sharply than semi-skilled or higher-skilled jobs. This is also against a backdrop of a decade-long of a declining trend in the creation of high-skilled jobs in our country, which we examined very recently in our latest economics and monetary report. So post-pandemic as well, lower skilled workers are also facing added risks from the response of firms to move towards greater digitalization and new ways of working. Now, graduates also are another challenge, and they're coming into the market also at depressed salaries, and this is also more likely to mean that they may face prospects of lower incomes over the longer term. I should add, and the final point on this slide is the relief measures that were rolled out themselves had longer term consequences, and something that is important for us to watch for. During this period, and I'll cover this in the next slide, we rolled out a series of repayment assistance and other relief measures by the government. And to the extent that borrowers have not always made good decisions, this could have potentially negative outcomes over the longer term. And during this period as well, individuals were able to draw down on their retirement savings. And again, without a clear path to how they will rebuild those buffers, that also poses risk to consumers moving forward. So a little bit about the relief measures that we implemented during this period. At the onset of the crisis, when the economy went into a sudden stop, it was extremely important to provide swift and temporary cash flow relief for the most severely affected. And we found ourselves in a position where this was very difficult to achieve because the ability of banks to process repayment assistance applications became a significant challenge. And so what we did, and we may be one of a few countries only that did do this, was introduce a blanket-wide deferment on repayment of loans. This was across the board for individuals and SME loans, and it was for a 6-month period. So the default was all loan repayments were suspended, and borrowers who wished to continue to service their loans could do so, and that they would opt in that basis. So, you had to opt out from the blanket deferment. This covered all loans with the exception of credit card balances. And for credit card balances, borrowers could convert those into term loans with financing at lower interest rates. In the insurance sector, the insurance industry also provided 3-month deferments on the payment of premiums and also other flexibilities for policyholders to continue their insurance and takaful contracts. And the insurance industry came together to set up a 10 million COVID-19 test fund through voluntary contributions, and also provided various concessions on COVID-related medical expense claims to their policyholders, even though these were not contractually covered. As the economy started to reopen in the second half of last year, and the movement restrictions were relaxed, we started to transition the blanket moratorium into more targeted repayment assistance. This would be on an opt-in basis. So if borrowers wanted repayment assistance, they would apply for it, which was very different from the first iteration of the repayment assistance measures. And this was important, and I'll cover that in a bit, but it was important that we did this because, as I will show later, it does nudge borrower behavior in the right direction. And we were conscious that even while there was a necessity for operational reasons to have a blanket-wide moratorium, we always had in mind to make sure that we were transitioning. We also suspended the repricing for loans and financing in arrears to allow people to make these applications for repayment assistance if they needed it. In the latest iteration, the last repayment assistance package that was announced recently and opened in November, we provided a further deferment as conditions remain uncertain, but this came with more personalized financial planning. And the idea was to provide a more holistic debt management solution to borrowers that were coming off repayment assistance and may still need help given the uncertainties ahead to find themselves on firmer financial footing. Next slide, please. So some of the issues that we were concerned with during this period and the conduct risks that were top of mind for us was ensuring that the debt recovery and loan restructuring practices were fair to borrowers. The other conduct risks that were important was making sure that information, understanding, and expectation gaps concerning repayment assistance were understood and addressed, and that that banks were able to effectively communicate and manage complaints from their borrowers. So let me elaborate a little bit about what I mean by these measures. The first about unfair debt recovery and loan restructuring practices. It was important to make sure that reasonable opportunities were made available for consumers to obtain help in managing their debt, and that the terms of the restructured and rescheduled loans did not impose excessive burdens on consumers. So the examples most prominent in our market were with hire purchase and fixed rate loans, making sure that, as banks provided these loan restructuring and rescheduled packages, they were doing so under terms that were fair to consumers. It was also important that borrowers understood that although they were able to defer their loan repayments, and this measure had strong appeal with many borrowers, the low understanding about what that involved was a risk that we were concerned about. Borrowers subsequently then being taken by surprise with additional interest costs and longer repayment tenures became an issue that we had to manage in our market. And this was compounded by poor communications on the part of banks to some extent, and the low responsiveness in the initial stages to complaints from borrowers. It compounded these issues to a large extent. So what did we do? We ensured that the practices in computing the costs of borrowing for restructured loans were managed carefully, and we had to end up being fairly prescriptive in setting computation methods for the banks to follow. On the second issue, we also required banks to make sure that they were taking actions to advise their borrowers down the road when their financial circumstances improve, to revisit their repayment assistance packages. And, most likely many should be encouraged to actually increase their loan repayments to get back onto their original servicing terms. We also did a lot to expand avenues for distressed borrowers to seek advice and assistance, including through enrollment in debt management programs, ensuring that they could access personalized financial counseling through our debt management and counseling agency, and making sure that we at the central bank also provided an independent complaint channel for borrowers to reach out to and to have their issues with banks resolved. And finally, we issued supervisory expectations for banks to ensure that they were managing this entire process well at their end with proper oversight of the crisis measures. And we actually encouraged banks to set up war rooms that would support the prompt identification and response to emerging issues. Let me just close with some final reflections and lessons from this experience. I think, next slide, please. Number one, policy design and execution matters to nudge responsible behavior. So as I mentioned, while we started with a blanket moratorium, it was critical to us to make sure that we stayed the course in transitioning to a more targeted repayment assistance process with an opt-out basis. And this was important because we wanted to make sure that borrowers were nudged to make decisions about their debt and not assume that debts were going to be suspended indefinitely. And that as they were making these decisions, it provided that the interaction point with the banks to discuss their situation and understand their options. Secondly, effective consumer and stakeholder engagement was absolutely vital. It was a challenge for both the banks and the central bank to some extent, making sure that our communications to the public were in plain language. We spent a lot of time monitoring social media platforms to identify where poor understanding and could compound issues. And we made sure that as we were picking up these issues, we made extensive use of FAQs, social media tiles, and computational illustrations to help educate and inform consumers. And we also made sure that there were multiple channels available for affected consumers to seek help. Importantly, this was a period where there were high emotions running because people were clearly facing difficulties. And so we made sure that we were keeping the political leadership informed of the measures that were being taken in the financial sector. And they played an important role to help also educate and communicate with the public. On coordinated interventions, I think that was another key lesson for us during this period. I think ensuring that we were coordinated both in the central bank and also across the banking institutions and between the central bank and the banking institutions was important to reduce uncertainty and to meet our policy objectives. As I mentioned, banks were asked to set up cross-functional war rooms, and we did the same within Bank Negara as well, pulling together people from our policy departments, consumer conduct departments, communication departments, and our risk and supervision teams to make sure that we were able to coordinate actions as we responded to the issues that arose. Finally, financial literacy. I mean, one of the key lessons for us was, financial literacy really does need to be enhanced, and this will be something that we'll be spending a lot more time and intensifying our efforts around. Existing programs to elevate financial capabilities will need to be ramped up, and around 4 particular areas, if I could mention them. There was a very low understanding of what accrued interest meant versus what compounded interest meant. So these were basic financial skills and education or knowledge that was not common in many segments of borrowers. Building buffers, the importance of building buffers for emergencies, the importance of making sure that you did not, expose yourself to financial scams and fraud was particularly important during this period as well. And this was a period where the migration to digital financial services was accelerated. I think it is clearly also important for us to educate consumers on the measures that they can take to protect themselves when using digital financial services. So I'll pause there, Florence. Thank you very much.
Thank you so much, Jessica. It was excellent. I really liked your ending slides with the 4 key lessons learned from your experience, and certainly design of policy is absolutely critical when it comes to appropriate behavior from consumers. You mentioned the engagement with other public institutions, but also the industry and consumers, and how it can be challenging, the coordination, which is key. And last but not least, obviously, you mentioned also that financial literacy needs to be enhanced in the large part of the population. I can tell you it's not only the case in Malaysia. So the latest OECD survey also show quite low level of understanding of precisely what you mentioned. Compound interest is very poorly understood by a large majority of the population. And then obviously that creates some issue when it comes to debt product and how to manage your debt, but also saving in some instances. And digital financial literacy, lastly, that you mentioned, really, really key. So thank you so much for your presentation. We'll have question at the end. I'd like to remind the audience that they can actually ask question in the chat, and that we will pick them up at the end of the panelist presentation. I would like to give the floor now to our colleague from Indonesia, Mr. Sarjito, who is Deputy Commissioner for precisely education and protection of consumer. Mr. Sarjito, the floor is yours.
Thank you, Florence. I've never seen you, I think last time I met you in Paris. Distinguished guest, delegate, ladies and gentlemen, this time I have the opportunity, it's very honor for me to speak before the OECD groups and also the very excellent guests and also panelists. Today, I'm going to speak on the market conduct and consumer protection perspective. Let me start my presentation by the OJK mandates in the financial education and consumer protection. First, under OJK law, we have seen clearly that the mandate of the OJK, the third mandate would be protect the consumers and the society. So by then, as you could see on the Article 4 of the OJK law, we have clearly stated over there that the OJK must be able to protect the consumers and the public interest of the society. And under the same law, under Article 10, on the structure of the Board of Commissioners, we have also clearly over there mentioned that there is a member in charge of education and consumer protection. So the mission is clearly stated, and also we have a member of commissioner who dedicated on the consumer protection and education. And then under the OJK also mentioned clearly that the mandate of the financial education and consumer protection, it was laid out on the Article 28 and 31. Next. As you could see on the graph, on the picture before you there, that there's a massive growth in the financial complaints, mainly during the pandemic. As you could see, on 2018, there was only 86,000 complaints. And on 2019, it increased under 117,000 complaints. And you could see during the first pandemic, on 2020, you could see 245,000. While on 2021, it increased dramatically from 2020, which is now increased around 143%. What are actually the top complaint issues on the pandemic? Which is first, loan restructuring. The second one, unethical debt collection practice. And the third one, legality of the entities. And then fourth, fraud, insurance claims. And you could see why then loan restructuring? Because, of course, during the pandemic, lots of debtors got the problem in running the business. Some of them even closed the business. So they, of course, asked to the creditor how to repay their loan. So they try to complain to the OJK. First, they also speak to the financial service provider, but most of the time they refuse and they complain to the OJK, and then we have a lot of complaint. Of course, with respect to the loan restructuring, this is not really a problem between consumers and the creditor, but actually this is not about the dispute or the violation, but because the problem of the pandemic. How about the unethical debt collection practices? During the pandemic, of course, this is why illegal investment scheme, mainly the predatory lending, we have a lot of complaint on the predatory lending, and this actually illegal predatory lending, illegal peer-to-peer lending, which is not registered or licensed at the OJK, but they complain to us as a society. So we, of course, we respond this complaint. And as we understand now, actually this illegal investment scheme has been practiced quite a lot by the foreign practitioner, which is very bad for our society. And about the legality of the entities. Legality of the entities has also become a problem. Complain to us about the legality of the entities, because some of the entities that they offer to the society actually not licensed by the OJK. And the fourth one is the fraud. Fraud, of course, because of the pandemic, and also fraud actually started before the pandemic. They started, investment management, who actually offer the client, which is not committed to pay their commitment, and also offering something which is not in line with the rule. And the fifth one with the insurance claims. Of course, insurance claims become quite a lot because of the understanding or dispute between the consumers and the financial service provider, normally because of the agent did not tell quite clearly when they offer the product. Next. Okay, stop, back. And you could see also on the advertisement compliance trend, as you could see on the graph, that before we quite active to impose sanction and also reminder to the financial service provider, you could see that the percentage of the not compliant advertisement is quite big. On the first semester, it was around like 64%, but lately, it's only 6% on the quarter of the 2021, which is much better now, because our patrol because our reminder to the financial service provider that they must advertise clearly and not mislead to our prospective consumer in the society. Next. Well, this is only a detail that I think it was mentioned before, how we, not only OJK, but the task force combating the illegal fintech or illegal peer-to-peer lending. This is a potential vulnerabilities, and the most frequent that complaint from the society is that the unethical debt collection practices. They misuse personal data, such as the use of contact numbers without permission. And you could see, actually, the fintech in Indonesia is not because the pandemic, because as you could see, on 2019, the task force, which is Investment Alert Task Force, has already blocked 1,493 fintech illegal, and on 2020, around 1,000, and on 2021, only 708. But the problem with this illegal fintech is that when you close today, even 5 minutes after that, they can, mutant and then have a new type of illegal fintech. And we understand the gap between the literacy and inclusion in Indonesia on the financial inclusion is still high, but actually now the opportunity for the crime to offer such illegal thing is quite huge, because with the application and with the digital era is very easy, and not many people understand which is right or wrong. And that's why we always inform or educate our society and remind our society that if they want to apply for peer-to-peer lending, they have to make sure that the peer-to-peer lending must be licensed or registered within the OJK. And they just call us, with the 157, and they can also send through email and also through WhatsApp, which is quite easy. And today, thank God, with the corrective action, and this is becoming the curiosity and also concern of the president, that combating illegal financial technology, P2P lending, has become national concern. That's why the police officer actually very aggressive, and everywhere in Indonesia they try to catch up the illegal investment scheme and mainly the illegal P2P lending. And with the strong enforcement, now is rather less and less, and hopefully the society then learn that they always make sure if they want to deal with the P2P lending must be legal and licensed by the OJK. Next. This is what I mentioned earlier, that they can have an access to 157, and also through WhatsApp, website, email, and mobile apps. And within the situation on the pandemic, the financial education it will be changing. Before we did traditional education through meeting people, but within the pandemic, and we do a massive online and offline financial education program which is more than 1,000 activities. And we have around 430 online materials with 6 million views. As at the OJK, we provide education from preschool, even before kindergarten, until university, and we have an e-book for them, to watch and also to download. Hopefully, that some of the school and also the Ministry of Education may oblige, at least at high school, that this class become mandatory, that become attention, because now is the education is not easy in the digital era, because we reach more people through the internet, through the webinar, but we are not so sure if they really watch and understand the education or not. Next. Well, within the OJK initiative, to protect the consumers, we have to strengthen the financial consumer protection regulation. First, we take care of the product life cycle embedded with the financial consumer protection and recording during sales activities. Why we did that? Because we have to make sure that the product life cycle, the product that designed by the financial service provider is fit to the consumers. And also, they also putting the right and the obligation of the consumers clearly in order that later on the complaint and also the dispute can be minimized. How about the recording during sales activities? Lots of situations that the consumers got complained to the OJK, but surprisingly, almost all of them, they did not have any proof to make sure that they never been told before in sales activities. They told us that we never been informed of these consequences, and we are not informed with the right and the obligation, but they didn't have any proof. So we try to protect them by recording during sales activities, which is very important. At least one day they can confirm to us that they have the proof to complain. And the confirmation from the consumer of the contractual clauses. Most of the time, sales agent or even the financial service provider, they did not really, care on the confirmation of the consumer contractual clauses, because they may have quite a bit of time to learn, even discuss with the family and discuss with the people who understand more on the clauses. And the financial service provider must explain clearly that the contractual clauses like this is the right, this is the obligation. And the fourth one is that the access for consumer digital contract. Even in the past, there is no, they tend to, that the financial service provider not giving the consumers the digital contract. So in the new rule, we oblige them to give the consumers on the digital contract, because otherwise, again, when they complain to OJK, they didn't have any material. And then the fifth one is the financial product information summary. This is very important. When the consumers or prospective consumers try to get the product, they have to make sure that they understand the right and the obligation, the product quite clearly. And of course, most of the time, the financial service provider give us a bunch of papers, even in the digital thing, and normally people do not read quite clearly, and even they don't understand, they just sign without reading the content of the contract. That's why we want them to have a concise and summary of the information, which is clearly for the consumers before they get an access into the financial product. So hopefully it will reduce the dispute and also the problem after the sales happen. Next. Well, this is actually, as I mentioned earlier, this is the market conduct supervision mechanism that we have been doing. First, we really care on the design of the product and product launching, and also the third one would be the most important, which is marketing of the product. Because most of the time, a financial service provider have a good product, but the sales agent or the marketing, when they sell the product to the prospective consumers and the society, they did not tell quite clearly on the right and the obligation and the consequences of the product. And then it created complaint and also misunderstanding. And also the after-sales service is also important, and they have also have the mechanism on the dispute resolution, because when they have a problem, consumer complaint, they can inform to the financial service provider first before they inform the OJK. Even now, OJK has a portal for the consumer complaint, and OJK may monitor quite clearly how much complaint and to whom the complaint sent to the financial service provider, and we can monitor, and we can also see whether the financial service provider has responded or not to the complaint of the consumers. And we have also guidance on the advertisement financial institution, and guidance on the closest contractual agreement on the financial sector, and we have also the financial product information summary, and we have also guidance on internal dispute resolution. I think, Anne, I'm going to stop until this point, and we are happy to have a Q&A later on. Thank you.
Thank you very much, Mr. Sarjito. It was really an excellent presentation, focusing on one of the areas that a lot of policymakers and regulators and supervisors are actually facing this day, which is really increasing frauds and claims, obviously coming from consumers. And it was really interesting to see how Indonesia and OJK in particular is trying to address the issue. So thank you very much. It was really an excellent presentation. I'd like to say that, of course, accelerating cyber crime and fraud has accelerated in most countries, and this is certainly something that the OECD research that we've conducted for the G20 Italian presidency this year has shown us. And there was a question actually in the Q&A, so if you want to ask questions to our panelists, please post them on the Q&A slot here on the Zoom. There was actually a question to the OECD, so I will quickly address that. Obviously, while we all see that indeed that there is increasing cyber fraud, so the question was whether there was some kind of regulation or supervision when it comes to data protection and protection generally of consumers. So I'm pleased to say that at the OECD, we developed some specific guidance on financial literacy and financial consumer protection, data privacy and digital security. And of course, we are happy to put the link to those guidelines in the chat. But just to give you a kind of flavor of what this document are saying, we are really trying to push policymakers and oversight authorities to also actually use digitalization to detect fraud, and for example, using AI to identify and block phone numbers that are used for voice phishing and identify potential harmful email. We are also pushing policymakers to consider establishing dedicated reporting channels for financial consumers to report frauds and scam. And obviously, like the Indonesian OJK has done, we are also supporting the fact that some consumer awareness campaign warnings are actually issued in order to help consumers identify and detect fraud earlier. There are, of course, a lot of other guidance in those documents, so please do not hesitate to check that, and perhaps I will come back in the Q&A with some more questions for Sarjito on particularly this issue, because it is an issue that will potentially escalate rather than diminish in the coming years with the acceleration of digitalization. And I see that my colleague Mais Larbe has posted actually the link to the guidance I just mentioned. So with that, now I'm very, very pleased to give the floor to Mr. Eng Bomakara, who is actually Deputy Director General at the of Banking Supervision, should I be specific, at the Bank of Cambodia. Eng, the floor is yours.
Thank you, Keuangan, and my dear panelists. I'd like to thank OJK and OECD for giving me the opportunity to participate in this campaign of the inclusion, financial consumer protection, and financial literacy, and in the Asia Pacific. May I move to the next slide, please? So in this context, I would like to focus on how the COVID-19 pandemic has impacted the personal franchise situation and the franchise resilience of franchise consumers in Cambodia. Please move to the next slide, please. And you may see the pandemic has been affect the global economies, and in 2020 the world economy has declined minus 3.2. It's not different from the world Cambodia economy that used to grow at around 7%, also has been affected by the COVID-19. So last year, 2020, the economy was declined minus 3.1. However, we expected that the economy will grow to around 4% by 2021. However, the outbreak of COVID in 20 February this year has led to a modification on the economic growth this year to 2.4. In this regard, we can see that most sector has been affected. However, the agricultural sectors are still good, and the recovery of manufacturing sectors start to grow from the pandemic. Now move to the next slide, please. Even though all the sectors have been affected, most of the sector have been affected, but if you look at the banking sectors, we can see that the banking sector remains resilient, even though it's the pandemic. If you look at this, we see that the asset of the bank, the loan and the deposit of the bank remain growth from year to year, even though in the year 2020 and 2021, it's just that the rate of the growth was decline, which the growth rate used to be around 23, but was only to 15 in 2020. And then this year we can see that set growth is around 16 by third quarter 2021. When we look at the credit growth, credit remain growth from each year. Last year was around 17, but to this quarters, the last quarter of this year was around 24. This is on the banking system. But if you look at the resilience of the bank on the prudential regulation, prudential ratio, we see that the banks still maintain good liquidities as reflected by the high liquidities around 130%, and solvencies are quite high above the regulation because the minimum 15%, but the bank maintain around 23%. The NPL ratio of the banks remains low. Risk is around 2% before the COVID, but it slightly grew from 2% to 2.3% in the banking system as a whole. For the profitabilities, they still maintain the good profitabilities, the same level before and during the COVID-19. I think this might be because of they has been giving favor for their loan structuring. So we are moving to the next slide on the activity that the National Bank has been done during the COVID-19. So one, we have giving a bank to do loan structuring. After we have been affected by the COVID-19, then in March 2020, we allow the bank to do loan structuring on to all the sectors. Firstly, to the 4 sector, and then we extend to all the sectors, to all the people who are affected by the COVID-19. But the COVID-19 does not stop at that moment. So first time we allow the bank to extend to the end of 2020. But then since the pandemic still continues, then we allow the bank and financial institution to extend to the mid of December 2021. And then lastly, up until now, we allow them to extend the loan structuring until the end of this year. And we are now considering about whether we should extend it or we should do any regulation to make sure that there's no cliff effect within the banking system. We also allow bank and financial institutions to withdraw down 50% of their capital conservation buffer. So this preferential will allow bank and financial institutions to have more capacity to extend their credit to support the local economy, especially for the people who have been affected by the COVID-19. We also allow the bank and financial institution to recognize the audit interim profit to be added in the calculation on level. We also support to their CAR ratios, as well as we also restriction on dividend payment 2020 audit report. For the 2021, we no restriction for them to pay the dividend, but they had to ask NBC for approval on this. We also reduced reserve requirement to 7%. This one, normally we have a domestic reserve requirement for domestic at 8%, but reserve requirement for foreign currencies at 12.5. So we reduced the two ratio only to 7%. So this would increase the liquidities of the bank and financial institution for the potential withdrawal and increase the availability of fund for lending in order to support local economic activities. We also reduced the minimum interest rate on FPSO by 0.05%, which allow banks to access for local currencies with a lower rate. We move to the next slide, please. And then within the regulation that we provided, then what can benefit to the customers? So in this case, as you may see, starting from April, so in Cambodia, the pandemic starting from March, and then April we start to have a loan structuring, but then was when the situation first come down in October, November, and December, so we can see that the numbers of loan structuring has been decreased, as well as the amount of loan structuring. But because of the second wave of the pandemic in 20 February 2021, we can see that the amount of loan structuring has been increasing starting from March, April. But now, because of we can control the COVID, so we can see that the amount of loan structuring has been slightly decreased compared to the early of this year, we see May and June. And this can support a lot of people. If you look at on the bar chart, you could see that in 2020, we could have 242,000 people for the loan structuring. And at the end of this, we could have around 258,000 borrowers for their loan structuring. We'll move to the next slide, please. We'll move to the next slide, please. So which sector has been affected? And which sector has been restructured the most? As you may see all this, so we can see that the sector that has been the most will be the tourist, which is 18% of the loan structuring versus in tourist sectors, and following by construction 16% and retail trade 16%. So these are the sectors that have been affected the most. In addition to that, I would like to share that it is the NBC has issued a regulation on consumer protection, so that in this case during that time we can see that the amount of people who calling for supporting from the banks, calling for complaint from the National Bank has increased gradually between 2019 and 2020. I think because of the problem that they're facing. But most of the problem has been solved by our hotline as well as of each institution. I also would like to clarify that the NBC, the central bank, has established 5 hotlines at the headquarters to solve the complaint of the people or the public, as well as each hotline at our branch in each province to solve the complaint of the public. So this is what we have been done. This morning also we have launched we call the Let's Talk Money campaign. The Let's Talk Money campaign is the activity that promote financial literacy in Cambodia. So this is our second one. The first one was Let's Talk Money, but the second one was Let's Talk Money little by little. This is to enhance people to understand more about the benefit of borrowing money from formal institution, as well as the risk that they have if they lend it from informal lenders. We also enhance their knowledge about how to use their finance properly and to ensure that they not use the money for unproductive purpose, but for productive purpose. So I would like to share you with this, and I'm looking forward for the question in the next graph. Yes, thank you.
Thank you very much, Ang. It was really an excellent presentation on the situation in Cambodia, and especially all the support from the government in terms of land restructuration. And I understand that you're backing that up with a financial literacy campaign, especially to avoid informal borrowing. So excellent presentation, really. Thank you very much. again, I repeat, I see that actually we have more questions in the Q&A. I would like to give the floor to Anna Dawson for the OECD, and I would ask you to be relatively brief, but of course, do your presentation to make sure that we can have a little bit of time for questions and answers. Thank you.
Thank you very much, Florence. Good morning, good afternoon, good evening, everyone. It's my pleasure today to present to you the OECD research on financial consumer protection and financial inclusion during COVID-19. So as Florence mentioned, the OECD has been doing a lot of work in relation to the impacts of COVID-19 on financial consumers. So as you can see on this slide, it's a few of the more recent reports where the OECD has been playing a leading role to support countries to gather and share information to learn about what jurisdictions are doing to protect and support financial consumers. So on this slide, two of the main reports that you can see are G20 OECD reports that were done in collaboration with the G20 Partnership for Financial Inclusion in support of the Italian G20 presidency. So that's the report on financial consumer protection and financial inclusion, which was produced with the G20 OECD Task Force on Financial Consumer Protection, and the Digital Financial Literacy Report produced with the OECD INFI, the International Network on Financial Education. And there's also been several other reports that look at the Asian response and resilience and financial literacy in APEC economies. So I'll be drawing on the body of work that the OECD has been doing in today's presentation and provide some deeper insights, particularly for the Asia-Pacific region. So in particular, their financial consumer protection and inclusion work is based on a number of questionnaires, and in particular, we received a really impressive response with 164 organisations representing 81 jurisdictions responding, and this includes responses from ministries of finance, central banks, regulatory and supervisory authorities around the world. So in addition to these global insights that I'll show you briefly today, we'll also take a deep dive into the responses from the Asia-Pacific region as well, to look at how that might differ from the global responses. So looking now deeper at the consumer risks and digitalization, as you're aware, and as you've heard several times throughout the conference, the impact of COVID-19 on financial consumers has been significant, complex and varied. While it's presented a range of new risks and challenges for consumers and exacerbated some of the existing ones, it's also generated great opportunities, such as the development of new or enhanced financial products and the delivery of different channels driven by the lockdowns and enforced social distancing. So as you can see on this slide, this is where we asked in the survey for organisations and jurisdictions to rank the various risks arising from the COVID-19 pandemic and to rate their significance in their jurisdiction. So overall, at a global level, respondents were most concerned about reduced financial resilience of consumers due to reductions in income, followed by vulnerability to financial scams and frauds, which my distinguished fellow panelists have also covered today. So this chart here has the same data as the previous slide, but looks closer at how the Asia-Pacific region differs from the global results. So you can see here that the most significant risks in the Asia-Pacific region differed, and they were the difficulty for consumers to make financial commitments, such as mortgages, loans, bills, credit cards. And the focus on debt-related concerns is not surprising at all, given the high levels of debt that many households were carrying at the onset of the crisis. Reduced resilience of consumers due to reduced income was also a top risk. That's the second one that you can see on the slide there. And I'm sure as you're aware, listening to the other speakers today, that the findings in this data are not surprising, given that the pandemic imposed such strict restrictions that had such an impact on people's lives and their ability to work and earn income. So it's had enormous effects on global economies and on household finances, especially those households who are a bit more vulnerable or who had pre-existing low levels of financial resilience before the pandemic started. So I'll just touch on this very briefly because we have looked at it frauds and scams already. So as Florence mentioned, the data that the OECD collected showed that frauds and scams have risen in most jurisdictions around the world, including those in the Asia Pacific region. Turning to another risk, one of the most significant impacts reported by jurisdictions is the accelerated digitalisation of the financial services sector. And this can have challenges as well as opportunities. And it's a trend that was underway prior to the pandemic, but was really turbocharged by the COVID-19 related restrictions. So many jurisdictions increased their use of digital services. There was the entry of new digital financial products and services in response to the pandemic. And some jurisdictions experienced a very rapid uptake or enhancement of existing digital financial products as well, particularly payment and transaction products such as digital wallets, QR codes, contactless cards, and mobile trading apps and platforms. And so what this really highlights is the role of digitalisation in mitigating the effects of the pandemic on financial consumers, but it also, on the other side, creates the risk of financial exclusion, particularly related to a lack of digital financial literacy, as well as a lack of access to services for some consumers, whether that's digital access or connectivity issues or rural areas with the closure of bank branches, for example. And as has already been touched on in this session, it also poses increased digital security risks as well, and new forms of fraud and scams that are arising. The bright light, though, is that's really encouraging that around 50% of respondents to the survey did see an increase in the level of digital literacy or digital capability. So that's really encouraging, and it's an area that needs more work, but is heading in the right direction. So moving now from the risks into the measures that have supported consumers, it's really encouraging that when we look at the global trend on the right compared to the Asia Pacific trend on the left in the blue, that the Asia Pacific regions are more likely to have a national financial inclusion strategy in place, which is really valuable to support financial consumers. It's also really encouraging that the regulatory mechanisms to promote innovation tend to be more common in the Asia Pacific region compared to the global data. And this includes measures like regulated sandboxes, innovation hubs, and targeted support or guidance. So looking now at the financial inclusion measures in the Asia Pacific region, they largely mirrored the global trends, but there were a couple of exceptions. So these exceptions include that Asia Pacific respondents tended to be more likely to promote digital financial services, to improve literacy, to facilitate the entry of new providers and expand the use of digital IDs. However, on the other side, the Asia Pacific region tended to be less likely to expand access to the internet or electronic devices. However, there is a great example from Malaysia around the Ministry of Finance, where they've launched a program with telecommunications companies to try and alleviate the financial burden of accessing internet services by offering credits and free data to households who are in the lower income distribution. So taking all of this data and findings that I've very quickly covered for you, it's really critical to learn from the pandemic so that there's enhanced access, inclusion and protections going forward. So the OECD work identifies effective approaches based on what we've learned. Some of them are shown on this slide. I won't go into them all in detail, but I will highlight that harnessing digitalisation and having quick and flexible hardship arrangements are particularly relevant to today's session, as is addressing scams through a multi-pronged approach, which had been touched on particularly by Deputy Governor Chu. And these effective approaches build on the existing frameworks that are in place and are also particularly relevant for the review of the financial consumer protection principles, which is being conducted at the moment, and you heard about that yesterday. So just in closing, I'll leave you with a few thoughts about the next steps. So in order to learn from the current pandemic, it's really important to gather financial consumer perspectives, particularly in relation to the measures that were put in place to support them. So this is critical for us to learn for the next crisis and to make sure that there's enhanced access and inclusion going forward. So as Lauren mentioned in her opening remarks, the OECD will be conducting new research on consumers' experience of COVID-19 policy measures, particularly looking at resilience and the relationship with financial consumer protection and financial education in 3 countries from Asia, which is Cambodia, Malaysia, and Indonesia. We're very fortunate to have speakers from those jurisdictions here today. So this session will be an important input to that research, which we'll present early next year with another webinar that we'll make sure that you're all invited to. So I'd like to just finish by closing and thanking the government of Japan for their support for this research, as well as their support for the OECD contribution to this joint conference with OJK. Thank you very much for your attention.
Thank you very much, Anna. That was a very good summary of the work that the OECD has done on looking at the issues around the pandemic when it comes to financial consumer protection, and also some of the measures that were taken in actually your countries. We have a little bit of time for a Q&A, and I see actually 3 questions for our Indonesian, Malaysian, and a Cambodian speaker and panelist. So I will take them, and then I'll have one last question as moderator as we wrap up that session. So the first question is really for Mr. Sarjito in Indonesia. I'm picking the question that is really focusing on dispute resolution. We've been discussing frauds and claims on and on in this panel. So I think it's a legitimate question to answer. So he's asking about more efficient dispute resolution, and what do you think in particular of potentially online dispute resolution? I will continue with the 3 questions, and then I will let each of you respond, so that gives you time enough to think about your answers. Then there is a question really for Cambodia, asking about what's the next plan in terms of recovery and extending perhaps the plan that are currently in place in terms of the restoration of loans beyond the end of the year. As we know, the pandemic is actually continuing. And then there is also a question for Jessica in Malaysia. And again, around the fact that the pandemic is unfortunately not over. So what is your plan considering the Omicron variant in terms of the credit restructuring policy again? So a lot of interest in really knowing if you policymakers in the region are planning to extend your current policies. And then I've just heard that we may have a little bit more time. So please take your time in answering those questions. And as I said, I have at least one question myself, and if I'm allowed, even 2 questions. So perhaps let's go first to Mr. Sarjito, if he's with us, on the first question, which was on dispute resolution.
Okay, thank you. Thank you, Anne. In Indonesia, OJK has issued regulation that we, of course, before we had our dispute resolution agency on our own, it was under the consumer protection law. But with the OJK only admit dispute resolution agency which is licensed by the OJK. So we hope that the arbiter and mediator are competent enough to solve the dispute between the consumers and the financial service provider. Why? Because there were complaints before we had our own alternative dispute resolution agency, because there was unfairness. But as you also asked, what is the possibility of the more efficient dispute resolution? Of course, we really push on what we call the online dispute resolution. In the digital era, of course, we try to manage online dispute resolution in such a way that sometimes consumers also, Indonesia with 13,000 islands, you could understand how difficult, and not all region has the OJK offices. So consumers which has a complaint to the OJK, later on they can settle the dispute, internal dispute resolution with the financial service provider. But if they're not finished, then they're going to go to the external dispute resolution, which is licensed by the OJK, and we hope the arbiter and the mediator, those who are skillful enough in the financial industry, not common mediator and arbiter, which is not specialized in the financial industry. So, for those who asked this question, OJK really push and we welcome, and also we are doing the online dispute resolution, that our agency also strengthen this capacity in order that it can reach far beyond the normal dispute resolution, which is reaching the remote area and the consumers with the efficient mechanism to reach and discuss with the financial service provider through arbiter and mediator, which is skillful. Thank you, Anne.
Thank you very much. It was a very clear answer, and my congratulations in really trying to improve and support consumer when it comes to dispute resolution in those difficult times. Plus, as you reminded us, obviously Indonesia has many islands, so it makes things even more complicated. Thank you for that. I'll move to Ang, perhaps on the question on Cambodia. I think the two questions for Ang and Jessica are actually a bit similar in terms of what's next, and if you're really planning to continue with your current support, especially when it comes to lending. So Ang first. Can't hear you, Hank. Apparently you're muted.
Thank Anne, and thank for the question. Actually, it is important to identify what we should have done after we give forbearance on the regulation. I think let us bring back to what we have done before the COVID. So if you look at this, the abilities of the banking system in Cambodia remain resilient even though facing the pandemic, during the pandemic. It's not a coincidence, but it's because of what we have been done before the pandemic during the good time. So building a resilient banking system during the good time is very crucial to ensure that the bank can resilient during the crisis. For example, we increase, we have a capital buffer, 2.5, in addition to the current ratio with 15%, CAR ratio 15%. So the bank had to maintain 7.5% for the CAR ratio. It's quite high so this one to build the bank resilient. The bank had to maintain the liquidity at least 100%. So these are the activity that we have been done during that. So being resilient, but to build this resilience is not just one time. It takes many times to build this resilience. So when we withdraw the regulation that we have been taking, for example, the reducing of reserve requirement to 7%, the reducing our capital buffer, and allowing bank to do loan nurturing are what we have done during the COVID-19, as I mentioned. So in this case, when we want to withdraw the regulation, after that, we would not take all the regulation at one time. That would be step by step at the same way that we have done before the COVID-19. For example, for the reserve requirement, we might not able to jump directly to 8% for local currencies and 12.5% for foreign currency, but we might can increase from 1% to another percent for another percent for both currencies. But the local currency, I'm sure that would be still 8% for at the same as the previous time before the COVID-19. For the CAR ratio, we might allow the bank to maintain 50% or 1.25, but we might take some time, maybe not 2 or 3 years, but maybe another 3 or 6 months to maintain their buffer 50%. So this one we need to not only decide alone, but we also need to discuss with the bank and financial institution, especially the Association of Bank and the Cambodia Microfinance Association, to see how are the view on the policies. The policies had to be discussed with the partner who will be implemented. In addition to that, for the loan structuring, there are different types of loan structuring. So there are customers who do like 1 time with loan structuring, 2 times and 3 times and 4 times. So in this case, we ask the bank to collect information to provide us data, how many of the loan has been do 1 time, 2 time, or 3 time restructuring, and also ask them to provide the data on the loan that they think that will be not able to recover. So based on this information, we're not just based on 1 time information, but we have like survey. So we collect information like each 3 months, each quarter, to see the situation of the loan actually. So based on this, we would identify what activity that we should have done. For example, if you want to make a provision, so how many provisions that we should make on this, whether we should apply at the same regulation or we should give a favor to that regulation. This is still the discussion about what are the level of provision that we should set for the level of loan, either 1, 2, or 3 time factoring, and as well as for the loan that think that we would not be able to recover. Thank you.
Thank you very much, Hang. It was a very clear answer. So a kind of stage change in the exit strategy from the current measures, and in terms of the loan restructuring, kind of very granular monitoring of the various loans in order to make decisions. So very clear. Jessica, on your side, in Malaysia, what's the plan?
Thank you. So around loan restructuring, I mentioned that the latest package that was rolled out recently, in that package, we actually did envisage that there will be borrowers who will continue to face uncertainty for a period, even into 2022, a good part of 2022. And so when we designed that package, it was with that very much in view. And what was quite different about that particular package was, number one, it was coordinated by our debt management and counseling agency in Malaysia with the banks. So it wasn't so much as borrowers dealing bilaterally with their banks, but it was an opportunity for the AKPK, which is the debt management agency, to step in and provide a holistic debt management and financial management plan for borrowers that still needed some help. So there are a couple of components around that particular package that I think are very different from what we had before. The personalized financial plan is an important component because it will respond to the borrower's specific circumstances and provide a debt management plan that will suit those circumstances. So it's much more likely to be sustainable over a longer period. It also comes with the ability to actually pool all of the debt across different banks together. And so that plan that I mentioned would actually manage debt across multiple banks for borrowers that do have these. The AKPK also will provide links for borrowers with other agencies that they're connected with to, for example, improve income earning opportunities. So, it could be capacity building skills, learning new skills so that they can get different jobs. And finally, of course, very critically, the financial education component is also built into that. So borrowers will have to attend certain financial education modules online. So I think the combination of all of this was designed very much with a view that we're not just going to, it's not overnight that we're going to come out of this. It will take some time for some borrowers. And so it was designed very much with that in mind. And so we're reasonably confident that with such a program that will be able to support the borrowers that still need it. Thank you.
Thank you very much, Jessica. And I guess, a very comprehensive program to really target all the issues and challenges that borrowers are currently facing or will be facing actually in the future when it comes to repaying the debt. We are already into the break, but I want to ask just one last question, and I will really give you 30 seconds, 1 minute to answer. In each of your country, and I will ask to Anna if she wants also to take up that question, you've put in place a range of policy measures. Jessica, you highlighted that actually in some cases you modify your initial approach, for example, on blanket, a moratorium on the repayment of credit. So my question is not necessarily on this particular measure, but what have you learned from this crisis, and what will you keep maybe even after the exit strategy in terms of financial consumer protection measures, because you think this is something that should be here to stay? And I give you 30 seconds, 1 minute maximum so that people have the chance to have a break. Who wants to start with this one? Don't be shy. Anna, do you want to start?
Oh, thank you, Fran. I think from what we've observed, the most important thing is to have a holistic, coordinated plan. So that incorporates all elements of the system. So whether that's helping to improve education and awareness, that's making sure the right protections are in place, that there's the right enforcement actions going on, say in the case of scams and frauds. So I think it's looking at it holistically, and it touches on, I guess, what Jessica mentioned earlier about like kind of wargaming. How do we drive better outcomes? And really, I think what the research we've done has shown that it's not just looking at these issues in isolation.
Thank you. Very, very clear. So coordination and holistic approach to consumer issues. Who is next?
Probably emphasize again the point that I made earlier, that how we design the policies are really critical. And so it will be important to have already in mind that if circumstances are such that you do need to take exceptional measures, I think it's very important to reflect on how that influences consumer behavior and making sure that we're not creating longer term risks as a result of not managing that particular execution well. So for us, it's really about, are we weakening credit culture? I mean, it's important that we don't weaken credit culture over the long term, and that borrowers are supported in making wise, informed decisions. So policy design, I think, would be the key takeaway for me. Thank you.
Thank you very much, Jessica. Policy design and taking the consumer perspective really and its behavior.
May I add?
Of course, Ang, absolutely. Go ahead.
Actually, I would say that there would be one, as I mentioned, it is important to build a resilient banking system during the good time. Number two, it would be important to do a properly check on your business continuity plans. What happens if the people start to withdraw money immediately, for example, how to manage it? So during the pandemic, we don't know what happened. And after that, we don't know what's gonna happen. So the BCP had to be tested regularly to be sure that activate the ball and can achieve the goal on this. We also need to consider about what should we do after the pandemic, which is the business format. We might need to change our business strategies as the people who change their behaviors, people who never use online product, but now online financial services, but now start to use online financial services. People never use digital product, but now they use digital product. Every people now everything buy online. They use everything their phone. They don't go to the shop directly. They can just click and order. So along with this, it is important for bank to maybe move to digital. It's important to bank to ensure that they have risk to control the new product and new business strategies. But at the same time, when we move to digital financial product, it is important to also enhance digital financial literacies. As I mentioned by the other panelists, the digital financial literacy is an area that we cannot forget at the moment when everyone moving to digital. To ensure that people who use financial product, including digital financial services, have been well known about the risk and the benefit of using the digital financial services, and also knowing about what are their rights and how they can be protected from using the formal financial services versus informal financial services. Thank you.
Thank you, Ang, and very clear. And obviously, digitalization is here to stay, so we need to take that into account. Mr. Sargito, you have the last word, but
Okay.
it has to be a short one.
Okay.
Go ahead.
Well, what we learned from this pandemic, actually, this is the law of uncertainty that we have never learned before, we never experienced before, at least at my age, And what we can learn is that as a regulator, we need to have a flexibility on the supervision and regulation on this very critical situation, which is, for example, like I mentioned earlier in my presentation, some of the obvious complaint from the consumers in the pandemic is that debt restructuring, because of the debtors, basically they got really experienced a huge problem. Some of the businesses bankrupt, and of course, without intervention of the regulator, the creditor will not give even opportunity or relaxation on the possible of the credit. So with the intervention of the regulator, remind that if the debtors all then dead, so the financial service provider also dead, and some of the compliance that need to be complied by the financial service provider can be relaxed by the intervention of the regulator. Without that, of course, the financial service provider still keep, the policy. And the other things that in the era of the pandemic, so digitalization become very important, and we cannot rely on the traditional and classical situation, even in education. Even though for me, there is still new challenge that even in educating the society and the consumers on the product and services of the financial industry, on the advanced product. Now, we are facing even more challenge because how to educate our society and the consumers now become rival for those who illegal investment scheme, also sending education and attracting them on the way how they try to attract people, even me, and every day I was offered, illegal investment scheme, even from those a company or financial service provider who are licensed, not by the OJK. But this is very critical, and imagine if I am, who live in the financial industry life, still being offered with such a thing, why, how about the people who are, quote unquote, not only illiterate, but not really understand on the financial product clearly, and in this difficult situation, then they become tempted to get into it, which is, this is actually a trap, and get into the cave and cliff, and even they can bring them to such a death. Thank you, Anne.
Thank you very much, Santoso. It was excellent. I have 5 points to conclude, and then I will hand over to our MC. First is coordination, holistic view, while integrating flexibility that you mentioned, Santoso, that I think it's extremely important to keep this flexibility in regulation and supervision. So certainly a very good point. Policy design, important, and then obviously the impact of digitalization. And again, a warning that financial literacy should be stepped up. So thank you very, very much. It's been an excellent panel. It was a pleasure to moderate you. I will now hand over with Barbara applauding you for this excellent session to our MC. Thank you so much.
Our excellent moderator who led this session very well. Thank you once again, Ms. Flor and Messi, and to our speakers. It's really great, and it's really a fruitful discussion. We're having a new thoughts and new perspectives from the panel, and we hope that it will be useful for us in the future. Once again, thank you, Ms. Flor and Messi, our moderator for our third session. Okay, and distinguished guests and delegates, ladies and gentlemen, before we proceed to our next session, session number 4, we kindly ask attendees to answer a quick survey that will be presented on your Zoom application. All you need to do, you have to answer all the questions. Do not worry, it only takes about 2 minutes to finish the polling. Thank you very much. Once again, thank you very much for taking your time to fill out the survey. The result is our upcoming conference. Once again, thank you very much. Distinguished guests, delegates, ladies and gentlemen, and now let's continue to our session, moving to our next session, session number 4. So we will listen to a keynote speech from a woman leader from Bank Indonesia, Ms. Destri Damayanti, Senior Deputy Governor Bank Indonesia. Regretfully, she is unable to attend the conference. Her speech will be delivered by Ms. Yunita Resmi Sari, Head of MSME Development and Consumer Protection Department, Bank Indonesia. Ms. Yunita Resmi Sari will present development, challenges, and also policies in the implementation of digital financial inclusion for individuals, MSMEs in Indonesia. Please welcome Ms. Yunita Resmi Sari.
Thank you. Thank you. Let me speak in Bahasa Indonesia as it is requested by our regulation here. Izinkan saya membacakan sambutan keynote speech dari Deputi Gubernur Senior Bank Indonesia, Ibu Destri Damayanti. Yang saya hormati, Bapak Iman Syah, Deputi Komisioner OJK Institute dan Keuangan Digital dari OJK, Ms. Flor Ann Messi, Acting Deputy Director of the Directorate of Financial and Enterprise Affairs, OECD, Ms. Anna Zelensova, hello Anna, from Ministry of Finance, Russia Federation, and also the co-chair of the G20 Global Partnership for Financial Inclusion. Para panelis sesi 4 acara hari ini, Bapak Diki Wijaya, Deputy of Secretary General dari AFTEC, Ms. Joyce Suficiencia from Bangko Sentral Philippines, BSP Philippines, Ms. Laura Higgins, Senior Executive Leader from Australian Securities and Investment Commission Australia. Bapak, Ibu, hadirin undangan yang berbahagia. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Pertama-tama, mari kita panjatkan syukur Alhamdulillah karena atas limpahan rahmat dan karunia-Nya kita dapat berkumpul dalam keadaan sehat dan suasana yang baik dalam rangka OECD OJK Event on Financial Consumer Protection, Financial Education, and Financial Inclusion in the Asia Pacific 2021. Meskipun belum sepenuhnya dapat dilakukan secara tatap muka, saya berharap tidak mengurangi makna dan kebersamaan kita untuk terus memajukan inklusi keuangan digital khususnya untuk UMKM. Bapak, Ibu, dan hadirin yang berbahagia, kondisi pandemi COVID-19 secara extraordinary selama 2 tahun yang berasal dari krisis kesehatan dan kemanusiaan telah mengakibatkan tekanan pada perekonomian. Semua lapisan masyarakat terdampak pandemi, secara khusus kelompok paling rentan atau vulnerable dan kurang terlayani atau undeserved, termasuk UMKM. Untuk mengatasi permasalahan tersebut, berbagai negara telah mengambil langkah extraordinary dengan stimulus yang sangat besar, yang salah satunya ditunjukkan untuk bantuan sosial dan stimulus usaha yang perlu diimbangi dengan pemerataan untuk menjaga pemulihan ekonomi yang inklusif, dan hal ini tentunya dapat kita peroleh melalui inovasi teknologi digital. Izinkan saya mengambil statement dari Ibu Menteri Keuangan Indonesia yang menyatakan bahwa pandemi COVID-19 saat ini telah menjadi Chief of Transformation Officer dari sebuah negara menuju digitalisasi. Gaya hidup digital di era pandemi sebagaimana pertemuan kali ini dapat dilakukan secara hibrid telah membuka begitu banyak peluang. Peluang inklusi ekonomi melalui digitalisasi tentu juga semakin terbuka lebar melalui inovasi aplikasi digital yang semakin accessible termasuk bagi para UMKM. Menurut pandangan saya, pandemi merupakan sebuah blessing in disguise, bahwa melalui akibat pandemi, perekonomian justru dapat semakin inklusif dengan fasilitasi inovasi teknologi untuk membuka akses keuangan kepada seluruh lapisan masyarakat untuk mendukung ketahanan dan produktivitas perekonomian bahkan hingga pasca pandemi. Di balik terbukanya peluang yang berasal dari digitalisasi, kita tidak menutup mata terhadap tantangan yang muncul dan berisiko mengakibatkan turunnya kepercayaan masyarakat terhadap sistem ekonomi. Kurangnya literasi keuangan dan digital, akses terhadap infrastruktur digital yang tidak merata, masalah data privacy, cybercrime, serta praktik pinjaman online ilegal, hingga shadow banking perlu menjadi perhatian dan perlu dimitigasi melalui usaha kita bersama, termasuk melalui koordinasi secara internasional. Pentingnya akselerasi inklusi keuangan digital yang berimbang ini telah menjadi isu penting bagi banyak negara dan kemudian disepakati menjadi salah satu agenda prioritas dalam presidensi G20 Indonesia 2022. Melalui penetapan agenda ini diharapkan dapat diperoleh dorongan untuk inklusi keuangan melalui digitalisasi guna meningkatkan produktivitas, pertumbuhan ekonomi yang berkelanjutan, dan inklusif. Bapak, Ibu, dan hadirin yang berbahagia, Bank Indonesia sebagai regulator sistem pembayaran berkomitmen tinggi dalam mendukung pengembangan inklusi ekonomi digital. Akselerasi infrastruktur sistem pembayaran digital terus akan kami dorong melalui inisiatif Blueprint Sistem Pembayaran 2025 untuk menghubungkan antar sektor keuangan dengan sektor real. Melalui penyusunan BSPI, diharapkan Indonesia akan meraih manfaat digitalisasi secara optimal melalui sistem pembayaran yang cepat, mudah, murah, aman, dan handal. Akselerasi akses keuangan akan semakin terbuka kepada seluruh masyarakat dengan inklusi yang semakin dalam bagi masyarakat unbanked, termasuk para UMKM. Selama tahun 2021 sebagai implementasi BSPI 2025, digitalisasi sistem pembayaran kami tekankan pada 3 prioritas dan capaian penting, yaitu regulatory reform, infrastruktur sistem pembayaran retail, dan standarisasi sistem pembayaran. Tahun 2021 beberapa inisiatif telah kami laksanakan. Pengembangan standar Open API dilakukan untuk meningkatkan interlink bank dengan fintech. Pengembangan infrastruktur fast payment BI Fast diyakini dapat meningkatkan efisiensi transaksi pembayaran retail. Perluasan penggunaan QRIS sebagai standar nasional QR pembayaran dalam berbagai transaksi ekonomi keuangan digital. Dukungan sistem pembayaran dalam elektronifikasi transaksi pemerintah, digitalisasi bansos, dan transportasi tidak hanya meningkatkan efisiensi dan akuntabilitas, namun juga meningkatkan kesejahteraan dan membuka peluang inklusivitas. Reformasi pengaturan yang mengedepankan inovasi dengan tetap memperhatikan stabilitas dan mitigasi risiko akan menjadi muara dari berbagai inisiatif kebijakan. Bapak, Ibu, dan hadirin yang berbahagia, Bank Indonesia menyadari besarnya potensi UMKM dalam mendorong perekonomian nasional. mengingat kontribusi UMKM yang signifikan terhadap PDB dan terhadap penyerapan tenaga kerja. UMKM menjadi salah satu yang terdampak paling besar selama pandemi COVID-19. Survei kami menunjukkan sebagian besar UMKM mengalami penurunan pendapatan dan kenaikan beban usaha. Namun, di balik itu, ada pula UMKM yang mampu meminimalkan dampak pandemi, antara lain karena merespons dengan memanfaatkan media pemasaran online yang didukung penggunaan layanan keuangan digital. Respon masyarakat terhadap pandemi COVID juga tercermin pada pilihan dalam melakukan transaksi keuangan yang menggunakan instrumen berbasis digital. Hasil survei inklusi keuangan tahun 2020 menunjukkan terdapat peningkatan penggunaan akun menjadi 81,4%, terutama didorong oleh peningkatan penggunaan uang elektronik berbasis server. Pembangunan perilaku dan pola pikir digital atau digital mindset menjadi kunci keberhasilan transformasi digital UMKM. Penggunaan KRIS merupakan salah satu upaya Bank Indonesia untuk mendorong behavioral shift dari para pelaku UMKM ke arah digitalisasi. QRIS telah tersebar di 34 provinsi dan 480 kota kabupaten di seluruh Indonesia dengan 13 juta merchant, di mana 95,2%-nya merupakan pelaku usaha UMKM. Para pengusaha UMKM telah merasakan keunggulan QRIS, antara lain membangun profil kredit untuk mendapatkan pinjaman, cara bayar yang higienis, transaksi yang tercatat dan langsung masuk rekening, tidak perlu uang kembalian, kemudian mengikuti tren pembayaran terkini, murah dan bebas biaya, serta bagi para langganan bisa langsung membayar dengan transaksi tatap muka, sehingga memperlancar penjualan para UMKM. Untuk terus mendukung UMKM pada masa pandemi, Bank Indonesia akan mempertahankan kebijakan pemberlakuan merchant discount rate transaksi menggunakan KRIS sebesar 0% untuk kategori usaha mikro. Selain itu, pada sisi kebijakan makro prudensial, BI mendorong kebijakan yang berusaha menjaga momentum pemulihan dengan meningkatkan kapasitas pembiayaan ekonomi secara keseluruhan sebagai daya ungkit pertumbuhan ekonomi nasional. Untuk itu, Bank Indonesia telah merumuskan kebijakan rasio pembiayaan inklusif makro prudensial atau RPIM. Kebijakan yang bertujuan untuk meningkatkan pembiayaan kepada sektor UMKM ini memberi kesempatan yang lebih luas bagi perbankan untuk turut berpartisipasi dalam pengembangan keuangan inklusif melalui pembiayaan kepada UMKM baik secara langsung maupun tidak langsung. Bapak, Ibu, dan hadirin yang berbahagia, disadari bahwa transformasi digital berpotensi meningkatkan inklusi keuangan dan mengintegrasikan kegiatan ekonomi dan keuangan inklusif. Oleh karena itu, upaya peningkatan inklusi keuangan selain untuk meningkatkan kepemilikan dan penggunaan akun, juga diarahkan untuk meningkatkan kesejahteraan ekonomi atau mencapai inklusi ekonomi. Bank Indonesia mengintegrasikan kegiatan ekonomi dan keuangan inklusif tersebut berpijak pada 3 hal, yaitu pemberdayaan ekonomi, perluasan akses dan literasi keuangan, serta harmonisasi kebijakan. Dan kerangka kebijakan tersebut dijabarkan dalam kebijakan Bank Indonesia, khususnya terkait dengan pengembangan ekonomi melalui pengembangan UMKM, yang dilaksanakan oleh seluruh kantor perwakilan Bank Indonesia bersinergi dengan stakeholders. UMKM didorong agar memiliki daya saing khususnya melalui digitalisasi. Dengan program UMKM Go Digital di Bank Indonesia yang disusun secara end-to-end untuk mengakselerasi inisiatif BSPI. Bank Indonesia juga berkontribusi aktif pada Gerakan Nasional Bangga Buatan Indonesia untuk mendorong digitalisasi UMKM dalam upaya nasional memulihkan ekonomi UMKM Dan sampai saat ini telah terhubung UMKM Indonesia yang masuk Go Digital sebanyak 7,99 juta. Sehingga secara total UMKM Indonesia yang Go Digital mencapai 15,9 juta UMKM. Selanjutnya, untuk meningkatkan inklusi keuangan secara lebih luas, Bank Indonesia melakukan program edukasi, pemberdayaan ekonomi dan keuangan, termasuk ekonomi dan keuangan syariah, penguatan kebijakan dan program dari sistem pembayaran, serta perlindungan konsumen dan sistem informasi dan data. Hal ini diharapkan dapat mendukung pencapaian target keuangan inklusif nasional sebesar 90% pada tahun 2024. Bapak, Ibu, dan hadirin yang kami hormati, di tengah berbagai upaya untuk mendorong pertumbuhan UMKM serta inklusi UMKM di sektor keuangan dengan memanfaatkan peluang inovasi digital, tak kalah penting adalah upaya untuk meningkatkan consumer protection sebagai konsumen dari berbagai produk dan layanan keuangan, termasuk pembayaran yang menggunakan media digital. Saat ini transaksi pembayaran digital nasional pada tren yang meningkat seiring dengan kenaikan akseptasi dan preferensi masyarakat untuk berbelanja online, serta perluasan dan kemudahan sistem pembayaran digital dan akselerasi digital banking. Di sisi lain, risiko keamanan data dan modus penipuan digital pun meningkat. Hal ini menunjukkan pesatnya perkembangan inovasi perlu didukung dengan tingkat literasi dan keberdayaan konsumen yang baik. Kondisi ini saat ini masih terdapat gap yang lebar antara inklusi keuangan dengan tingkat literasi konsumen yang dapat mengakibatkan konsumen menjadi rentan terhadap praktek yang tidak adil atau unfair treatment serta fraud. Sebagai bentuk respon terhadap dinamika ekonomi keuangan digital ini, Bank Indonesia melakukan penguatan fungsi perlindungan konsumen melalui 4 strategic action dengan mengoptimalkan pemanfaatan teknologi digital, yaitu penyempurnaan pengaturan perlindungan konsumen yang merujuk kepada international best practice, peningkatan keberdayaan konsumen untuk meningkatkan pemahaman literasi konsumen, 3. Penguatan penanganan pengaduan konsumen yang efektif, dan 4. Pengawasan perilaku penyelenggara dengan mengembangkan roadmap supervisory technology. Bapak, Ibu, dan hadirin yang berbahagia, ke depan Bank Indonesia akan terus memperluas digitalisasi tahun 2022 untuk mempercepat integrasi ekosistem ekonomi dan keuangan digital, termasuk untuk mendorong ekonomi dan keuangan inklusif. Hal ini akan diarahkan untuk pembentukan ekosistem industri secara end-to-end dari perbankan digital, fintech, dan e-commerce, baik melalui kerjasama bisnis, kepemilikan, maupun bentuk lainnya. Bank Indonesia juga akan terus memperkuat program pengembangan UMKM melalui korporatisasi, capacity building, dan fasilitasi financial to access to finance, serta meningkatkan daya saing UMKM. Peningkatan kapasitas UMKM dilakukan secara end-to-end dan akan difokuskan pada digitalisasi untuk mendorong peningkatan produksi, pengelolaan keuangan, dan perluasan akses pasar. Akhir kata, kami percaya bahwa transformasi digital di sektor keuangan akan mampu membawa Indonesia menjadi negara maju dengan peningkatan inklusivitas keuangan sebagai salah satu langkah mempercepat pemulihan ekonomi nasional. Digitalisasi keuangan yang dilakukan bersama-sama, baik oleh regulator maupun industri, akan mampu menjawab tantangan di era kenormalan baru, serta memberikan manfaat yang lebih besar bagi seluruh rakyat Indonesia. Mudah-mudahan Tuhan Yang Maha Kuasa merestui dan senantiasa meridhoi langkah kita. Sekian dan terima kasih. Wassalamualaikum warahmatullahi wabarakatuh. Selamat sore dan salam sejahtera untuk kita semua.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you for Ms. Yunita Resmisari for delivering the remarkable speech. Ms. Yunita Resmisari, you may leave the conference. Distinguished guest delegates, ladies and gentlemen, after we listen to Ms. Yunita Resmisari keynote speech, we will continue our next discussion, panel discussion, which is this panel discussion will be moderated by Ms. Anna Zelentsova and IFI Ministry of Finance, Russian Federation and co-chair of the G20 Global Partnership for Financial Inclusion. So please welcome Ms. Anna Zelentsova. Hello, Anna. Good afternoon from Jakarta. How are you? Thank you. It's really great to see you and having you as a moderator for the next session. So you will lead the panel discussion. Time is yours, Anna.
Good afternoon and good morning, good evening for people all over the world. First of all, thank you very much. I am very grateful for inviting me to moderate this very important session. And I think that we have great panel of experts from who will give the insights from different perspectives. And I would like again to you already saw the pictures and names of the speakers, experts. I would like to say again that I am very grateful to Mr. Diki Wijaya, Deputy Secretary General of the Indonesian FinTech Association, who will speak first at this session, first panelist. Then Ms. Joy Sufficienza, Director of the Financial Inclusion Office in Banco Central of the Philippines, from Philippines, and Ms. Laura Higgins, Senior Executive Leader, Consumer Insights and Communication at Australia Securities and Investment Commission. So we already heard a very important and impressive speech from Ms. Yunita Resmisari, on behalf of Ms. Destri Damayanti. So thank you very much, Yunita. I think that it was really a great overview of the current situation, and also I'm very grateful for saying about this new trends and priorities of Indonesian G20 presidency. First of all, I would like to wish, I wish all the best and successes in your presidency, and of course we're looking forward to cooperation within G20 GP5. I would like to say a few introductory remarks on these issues of how COVID-19 affected digital financial inclusion and digital financial inclusion, and then give floor to our panelists, and after the presentation we will have time. I hope we still have time for the Q&A. So first of all, already many speakers yesterday and today of course said about economic and social impact of the COVID-19, which is profound, and sparing no country, the pandemic has also affected the access, use and quality of financial products and services for individuals, micro, small and medium-sized enterprises. And we see that pandemic has increased the vulnerability of particular segments of society, including women, youth, elderly, informal workers, forcibly displaced people, and those living in remote rural areas, as well as small firms. We also see that government financial support programs implemented in many countries have been great help in assisting households and firms. For example, at least 58 governments of developing countries switched to the digital programs in order to help households and MSMEs. Digitalization has helped contain the impact of the pandemic, especially where key enablers are in place. Of course, accessibility to digital infrastructures, connectivity, digital skills, and financial consumer protection are important. In 2021, GP5 under the Italian presidency took stock of country strategies to tackle the challenges and seize the opportunities for financial inclusion posed by the pandemic. In line with the objectives of the Financial Inclusion Action Plan and built upon the far-reaching work done during the past presidencies, GP5, together with our implementing partners, have produced 4 reports, and I would like to thank, of course, the OECD as one of our key implementing partners who made great impact by producing very important reports on financial literacy, digital financial literacy of MSMEs, and digital financial literacy and financial resilience of households, as well as the consumer protection. And you can see all our reports at the gp5.org website. Please take a moment to look at them. They are very rich and interesting, and we hope that they would be useful for countries. Drawing from this extensive work, we, GP5, developed the menu of policy options from country-level good practices from all over the world. And while recognizing that digital financial inclusion is critically dependent on several enable factors, this menu focuses mainly on digital financial education, financial consumer, and MSME protection. I would not go deeply in this report and these insights, but just to give you a flavor, just a few our ideas and insights. We believe that widening the range of responsible financial instruments available to vulnerable and underserved individuals and MSMEs is very important. And it's very important to take advantage of this momentum to increase financial literacy and digital financial literacy of population in our countries, as well as what this crisis also shows, that even more than before, it's important coordinated multi-stakeholder approach to strengthen financial inclusion. Of course, we know that not only governments, not only regulators reacted proactively on this crisis, but private sector also shifted very rapidly to digital financial services, digital payments, mobile payment. Money grew twice as fast as had been forecasted for 2020. And next year we will have data from the Global Findex. I think we will have even more insights on the data all over the world. Remittances proved to be resilient, though the forecasts were that this sector would be hit a lot by pandemic, but we see that migrants and remittances show great resilience all over the world, even despite some decrease in some areas and in some parts of all over the world. Overall, it was really resilient. So what all these things show to us, that we probably don't need to, and probably even can't, to back to the old situation, but what we really need, we need to move to a new financial normal, more inclusive financial world. And of course, how to do it and what are risks and what are benefits of digital financial inclusion, we will discuss with our panelists. And The first panelist will be, as I already said, Diki Widyaya, Deputy Secretary General of the Indonesian FinTech Association. In Indonesia, Diki began his career as a database administrator in California, and after then became regional content manager at Lucas Asia. So now Diki is the Deputy Secretary General of this big FinTech association, and it would be really interesting to see how private sector, how FinTech community see the developments of digital financial services and development during this pandemic crisis. So, Diki, the floor is yours. Please please use your slides if you would like, and you have 10 minutes maximum. After that, I would have to stop you because we have already a little bit limited time. So thank you very much, and please, the floor is yours.
Thank you, Anna. Thank you for the kind introduction. Good morning, good afternoon, good evening, ladies, distinguished guests and delegates, ladies and gentlemen. First of all, I'd like to say thank you for inviting us, Indonesian FinTech Association, or known as AFTEC, to be part of this discussion today on strengthening digital financial inclusion in the context of the pandemic for individuals and MSME. Well, basically, AFTEC is an association for FinTech industry players, and we are about 300 plus members, and it consists of course, FinTech companies as well as companies from banks and supporting industries. Next slide, please. Is my slide. Yeah. So today, I'd like to share what our members have done during the past 18 months or so during the pandemic, how our members have tried to help out. And we work very closely here with our regulators, both OJK as well as Bank Indonesia, on how to accelerate financial inclusion. And second, we'll also update you with how we've tried and we work together with the government as well on how to speed up the Indonesia's economic recovery. And lastly, of course, it's about the process that we've gone through to create a certain code of conduct for all our members in order to ensure consumer protection. Next slide. Next slide. So, as Ms. Yunita mentioned earlier during her presentation, the pandemic, of course, has accelerated digital financial inclusion adaptation. I mean, for starters, a lot of people now do not prefer to use cash when they do transactions, just for hygiene reasons, for health, and it's just plain, you get tired of spraying the money with, antiseptic. And so now, of course, if you can see, the payment system, the digital payment system grew. The latest data that we have, and I think slightly not less updated than what Ms. Yunita mentioned, in August 2021, we saw that during the month, the e-money transaction reached 1.7 billion, which is a growth of about 43% year on year compared to August 2020. And in fact, digital banking transaction as well, it crossed 1.2 trillion during the month in July 2021, which also shows an increase of roughly near 40% year on year. All this shows that people are more than willing to try the new digital services, and they are less reluctant to use cash, whether that's for retail transactions or even going so far to the banks, to the bank branches. And like Ms. Yunita mentioned earlier, the QRIS system that was launched by Bank Indonesia back in 2020, August, by our latest data in mid-September, it was only about 10 million merchants, but I think Ms. Yunita earlier updated, it has reached 13 million. And frankly speaking, that really helps a lot of the MSMEs, because people do not want to pay with cash. So now with that, they are able to transact in, for simple things like roadside stall. So the QRIS system really helps. But that's only from the payment side. If you see, from funding point of view as well, the peer-to-peer lending or the online lending companies, I think together they've disbursed about $1 billion through August. And that's using 100% fully online transaction. So none of the SME has to go to a branch, and they can get it, whenever and kind of wherever they are, and they can just register. In terms of the capital market as well, we've seen an increase both in mutual funds and as well as in the crypto market. The latest statistics shows that there are now 7.4 million users, crypto asset users in Indonesia, which grew about 86% compared to last year. And the fantastic thing is that their transaction value grew 740%. So in a way, it shows the willingness and I think the open-mindedness of both Indonesian MSMEs as well as Indonesian individuals to try out new digital channels, new digital products, so to speak. Next slide. Yeah, so the next point I'd like to share is how the fintech companies, I guess in a way, Ms. Yunita earlier mentioned that COVID is a blessing in disguise. We do realize that for a lot of the fintech companies, it grew. It grew during the pandemic due to the services that they provide, which kind of match the situation that we were facing. But of course, it doesn't mean anything if we don't also give back. And I think one of the key points that our members has been doing is that we want to help out. We try to launch initiatives, whether that's to help the MSMEs, whether that's to help the society, or even to help our government. Combined, I think the past 18 months during the pandemic, all our members, we've launched about 50 initiatives, more than 50 initiatives. And things like that. Next slide, please. So for instance, for MSMEs, we try to give them solutions that would reduce their operational costs. We lower the transaction fees. We give them free financial courses. We try to increase their financial literacy. We try to give them lower interest rates. It's basically the way the fintech industry is trying to give back to through SME by ensuring that the sustainability of their business is taken care of. Because at the end of the day, there are clients. If they can't survive, then of course, naturally, the fintech companies cannot survive. So it is in our priorities to ensure that they have all the tools, they have all the knowledge necessary to sustain their business. And that's what our members have been doing for the past 18 months. Next. In terms of society, and in the beginning of the pandemic, of course, there are people are confused. They have a lot of things, they have a lot of questions, right? So some of our members also created kind of an information center where to share with anyone, the number of cases and how you can get tests, basically information that the society needs in order to cope with the pandemic, as well as some of our members, we did a drive to prepare oxygen tanks as well as PPE, and these are just the small things. Again, it's about giving back to the society, and we feel that if our society can bounce back, then naturally, every fintech companies will benefit in the long run. Next slide. And the last, of course, it's basically supporting the government. One of the key milestone is last year, all the digital payment fintech players, we supported the government's Prakerja program. It is basically a program for channeling government funds to help with the unemployed and how they can use it to pay for classes online through, of course, certified and registered providers. And this was done very quickly. And I think one of the key points that we are fintech companies, it will be very humiliating if we cannot keep up with the needs and the requests of our governments because we are the tech side, right? So it was quickly done, and I think it really helps in the disbursement of the government fund. And as Ms. Yunita earlier mentioned as well, we also supported the Bangga Buatan Indonesia program. It's basically to help the MSME goes digital. And I think one of the amazing statistics that was mentioned earlier, that's like right now there's about 15.9 million MSMEs that went digital, go digital. Next slide. So we know, based on all the statistics, based on the usage, the adoption, this pandemic has really pushed everyone to kind of, even if you don't use it, if you didn't use it, now you kind of have to try, because at the end of the day, everyone's using it, and it's more practical. Next slide. Now, of course, the drawback of that is that because everyone is now using fintech, it becomes a very lucrative industry for illegal players, for bad actors. So we know illegal online lending has been a problem, and I think we are very appreciative with what OJK has been doing, what ICT Minister has been doing. They've closed down thousands of illegal apps. They've closed down thousands of illegal websites. But of course, again, bad actors will always try to find a way to kind of prey on victims. And I think one of the things is because in the beginning there's still some gap in terms of financial literacy, and of course there's also some gap in how our members acted. So one of the key points that we've done is that we've launched a few years, 1 or 2 years ago, we launched our code of conduct. So every members of the AFTEC has to abide through this code of conduct, the rules. And we also launched 3 specific business models, because in AFTEC we covered more than 18 business models. So we know that there is the general code of conduct, but then we have specific code of conduct for the specific business models, such as aggregators, such as innovative credit scoring, and such as the last one is actually wealth management. So the basic concept of this code of conduct, of course, is basically integrity, the quality of service, how they can maintain it, how kind of the principle base that they have to take care of the data of their customers, or even how they can take care of their customers, whether online or offline. We also promote transparency. We also promote security standards. And of course, at the last and but not least, there are clear processes and sanctions if our members actually crossed or do not fulfill the code of conduct. Next. Now, the last program, this is actually one of our key programs that we just launched. It's basically, we know a lot of people, they actually have the need to use fintech, right? They have, for instance, for lending, online lending, they do have the need to borrow money, but sometimes they do not know whether this company is legal or whether this company is legitimate. So we launched kind of a site joined with the peer-to-peer association. And we work very closely with the OJK Investment Alert Task Force. It's basically a website where anyone can check. And right now it covers all the peer-to-peer lending. It covers all the fintech companies that are member of AFTEC. So they can check and to see the legality, and also the logical offering that they get. These are, of course, in the website, there's also education materials. And last but not least, we are trying to create a centralized complaint system so they can submit it to us. And we can go through the process of checking and helping to check. And then we can either put it through our ethics committee, or actually work with the regulators to either close down or revoke certain certificates. Okay, next. Actually, that's it for my presentation. Anna, back to you. Thank you.
Thank you very much, Diki. Thank you for such comprehensive overview of the recent development of fintech in Indonesia. And I really like that you move forward in developing the conduct, the code of conduct of fintech. I think that self-regulation is very important also because not only regulation, and especially in such a rapid development of digital financial services can help to protect consumers and to help them to learn this new financial landscape and new digital skills. So thank you very much for that. And we are moving to the next speaker, Ms. Joyce Sufficiencia, Director of the Financial Inclusion Office, Banco Central Philippines, and Ms. Ellen Joyce Sufficiencia, as the director of the Financial Inclusion Office, deeply involved in various initiatives to drive the BSP financial inclusion agenda forward. So we would be very much interested to learn how you, your institution, Central Bank of Philippines, what are your proposed approaches towards promoting digital financial inclusion, both for individuals and MSMEs in Philippines. So the floor is yours, please.
Yeah, thank you very much. Good afternoon, everyone. Again, I'm Joyce Sufficiencia. I'm from the Central Bank of the Philippines. Let me first thank, of course, our organizers, our host, OECD and OJK, for inviting the BSP to share our thinking and current initiatives on promoting digital financial inclusion in the Philippines. If we can go to my next slide, please. Just let me begin my presentation by outlining our guiding principles in promoting financial inclusion in the Philippines. First is that financial inclusion is not the end goal, but a means to an end. We are pursuing financial inclusion not for its own sake, but for its envisioned benefits for the individuals, their enterprises, and the economy at large. And we know that for individuals, financial inclusion is a means toward financial health, which we define as the extent to which a person or household can smoothly manage their current financial obligations, weather emergencies and crises, and have confidence in their financial future. The pandemic and the many natural disasters that we have faced as a country have highlighted the importance of financial health and financial resiliency. We also know that meeting basic daily needs has even become a greater struggle for many Filipinos who have lost their jobs and income during the pandemic. And so it's very important to recognize that while access to market-based solutions is important, government safety net programs are equally crucial to help vulnerable individuals and households improve their financial resilience. For enterprises, financial inclusion is a means to increase productivity and competitiveness. And in the Philippines, the MSMEs is a crucial sector given its outsized role as source of income and livelihood for many Filipinos. And so a competitive and strong MSME sector can be a pathway to inclusive economic growth. And in promoting inclusion, we need to recognize that financial exclusion disproportionately affects certain segments and demographics. For the poorest segment, they can be really badly excluded. We can also look at gender, geographical location as among the demographic attributes that can affect inclusion. And with appropriate regulations and policies, another principle, digital technology can become a true enabler of financial inclusion. But that said, financial inclusion enablers go beyond financial sector regulations. We need supporting infrastructure and government programs that make the delivery of financial services to the low-income segments not only viable, but also compelling as a business strategy for our market players. And so it's important to understand that promoting financial inclusion should not just be a regulator's agenda, but a whole of government undertaking. And we are keeping these principles in mind as the BSP and the Financial Inclusion Steering Committee update our national strategy for financial inclusion, which we target to publicly launch in January of next year. Next slide, please. So we know that a basic indicator of financial inclusion is ownership of formal financial account. And with this metric, you can see that financial inclusion in the Philippines is still quite a challenge, with just 30% of adults owning an account based on our recent, based on our 2019 financial inclusion survey. And this is before the pandemic. We are expecting a significant increase in account ownership when the results of our 2021 survey comes out next year. As we know, the pandemic, for better or for worse, has obviously influenced this expectation, optimism, as many Filipinos have been compelled to shift to digital payments, just like other nationalities. And in 2019, we saw a 9% increase in account ownership from 2 years before, which basically translates to 5 million Filipinos onboarded during that period. We saw an impressive increase in account ownership among the poorest, or the socioeconomic class E segment, which doubled from just 14% in 2017 to 27% in 2019. And the same trend can also be observed among those in rural areas, where account ownership also increased from 20% in 2017 to 30% in 2019. We see this as good indicators of this group's readiness for digital finance. And complementing the overall increase in account ownership is the increased usage of digital payments, which in terms of, this is measured in terms of percentage of account holders who use their account for payments, which jumped from 20% from 10% in 2018. And looking at other key indicators, savings, insurance, and financial access points, they all increased from the baseline year to the latest available data point. But looking at credit, the results are quite mixed. While access to formal credit seemed to improve for individuals with reduced reliance on informal lenders, bank loans to MSMEs have declined as a percentage of the banking system's total loan portfolio. And this, in fact, has been the trend even prior to the pandemic. So these are just a few indicators of financial inclusion that we monitor for our financial inclusion implementation. And if we can go to my next slide. So here we see that mobile phone and internet usage in the Philippines show that there is a significant opportunity to expand the delivery of basic financial services through digital channels. If you look at this, is especially if you look at the number of unbanked adults that have a mobile phone, which is 7 out of 10. And 53% of adults use the internet, and they use it extensively. On average, Filipinos spend 11 hours a day on the internet, with 4 hours spent on social media. However, it's sad to note that only 9% use the internet for online financial transactions. At least this is based in our 2019 survey. And interestingly, as you can see, there are more Filipinos that have social media accounts than those with formal accounts. 69% of adults have mobile phones, and 3/4 of these mobile phone owners own a smartphone. However, only 12% use their phones for financial transactions. And so two themes persist for the non-use of digital finance. First is digital literacy, and another would be the digital divide. For digital literacy, lack of awareness and trust is cited as a top reason for not using digital financial services. We also note gaps in smartphone ownership and internet access across locality, income, and geography. And as you can see, 60% in urban areas are smartphone owners and internet users, while in rural areas, it's only 40%. And if you look at our socioeconomic class, 80% of adults in class ABC have a smartphone and use the internet, which is twice higher than the 40% for class E, or the poorest group. We also note a higher smartphone and internet usage for residents of our main island in the Philippines, Luzon, compared to those in the southern region of Visayas and Mindanao. So next slide, please. So now, as mentioned, the digitalization of financial services, which has been accelerated by the pandemic, will be a key enabler for financial inclusion. And this is the promise of digital financial services, if properly harnessed. But also, it's important that we recognize not just the benefits, but also the risk that digital financial services poses for all types of stakeholders. And that can be the government, our financial institutions, of course, the businesses, MSMEs, and individuals. The main benefits, of course, will be around improved efficiencies, which can redound to better designed and more affordable financial products and services, which will be a plus for our consumers and businesses. And the key risk there would be around greater vulnerability to data security and privacy concerns, which can lead to suboptimal, if not negative, consumer outcomes. And another key risk areas would be on increased disparities in financial inclusion levels if we are not able to address the digital divide, such as the access to internet and smartphones. Next slide, please. So in the last couple of years, the BSP has focused its efforts on building the foundations of digital financial inclusion by democratizing access to account ownership, expanding network of access points, and improving our retail payment system. But as we further unlock the potential of digital innovations for financial inclusion, we need to identify and address any gaps in a new set of imperatives or pillars for an inclusive digital finance as we emerge from this pandemic, hopefully very soon. The first imperative is the digital finance regulations aimed at boosting the dynamism and responsible innovation in the financial services sector. These are the underlying policy objectives of the digital banking and open finance regulations, the two landmark policies recently issued by the BSP. Our introduction of digital banks as a distinct bank category aims to attract market players with innovative business models, catering to the wide range of financial service needs of the largely unserved MSMEs and mass market. The BSP approved the application already of 6 digital banks, and 2 of which have already started operations. Another new regulation is the Open Finance Framework, which aims to promote customer permission sharing of data, of course, improve their access to well-tailored financial services at much better terms and cost. Open finance, we see it as a way to empower consumers as owners of their data so that we can also foster innovation and greater inclusion. So our guidelines espouse consent-driven data portability, interoperability, and collaboration among financial institutions and fintech players. Right now, we are establishing our interim Open Finance Oversight Committee, which shall exercise governance on the activities and participants of the open finance ecosystem. And this body will be under the supervision of the BSP. Of course, another important BFS regulation would be around cybersecurity to ensure that our supervised entities are equipped to meet the evolving risk in the rapid digitalization of financial services. The second imperative is a digital ID, the digital ID that can support cost-efficient, seamless, and reliable identity authentication, which is a basic requirement for financial transactions. And if you've heard, the Philippines is establishing a foundational digital identity system called the PhilSys, which aims to provide every Filipino a digitally verifiable proof of identity. This will not only facilitate more convenient account onboarding, but also greater innovations in digital financial services. And the government is targeting to launch the PhilSys online authentication and eKYC services by middle of next year. The third imperative is, of course, digital skills. We need to equip and empower consumers with the necessary knowledge and skills and capabilities to use digital financial services effectively. And BSP's main response to this are our consumer protection and financial education initiatives. We've developed strategic partnerships over the years to implement financial literacy programs to a wider segment of the population. Our consumer assistance mechanism, such as the BSP's chatbot, allows our consumers to elevate concerns to the BSP if they have concerns with their BSP supervised entities. And these consumer assistance mechanisms can be accessed through various communication channels. Of course, these solutions are not enough. BSP is well aware of the need to also effectively enforce consumer protection standards and foster an environment where our financial service providers are not just operating prudently and soundly, but also championing good consumer outcomes. This is what we hope to achieve with our legislative advocacy for the passage of the Financial Consumer Protection Bill, which will give all financial sector regulators the necessary powers and mandate to set and enforce consumer protection standards. And undergirding these three imperatives is digital connectivity. We cannot push for inclusive digital finance without pushing for universal access to reliable and affordable internet in the Philippines. Of course, we know that lack of connectivity, if we are not deliberate and careful, can aggravate or even create new forms of exclusion and rob certain segments of our population the benefits of using digital financial services. And so the BSP is also pushing for ICT policy reforms to fast-track internet infrastructure development, especially in the countryside. And this includes our open access bill and the recently signed executive order liberalizing access to satellite for broadband connectivity. So these elements are central to increasing cost efficiencies, leveraging data, and managing risk to deliver innovative financial services that can truly improve the welfare and empower consumers. Now more than ever, financial inclusion demands a whole-of-nation approach to meet the challenges and opportunities in the new economy. And if you can go to my next slide, my final slide. So like most central banks, the BSP has also issued a package of regulatory relief measures to ensure sustained lending to the MSMEs, even during the pandemic. As I've said, our MSME and the agri-sector represent the main source of income and livelihood for many Filipinos, but this sector has been burdened by multifaceted challenges even prior to the pandemic. They are, of course, typically perceived as high risk, high cost, and potentially low margin. And so our lenders may find very little incentive to invest in innovations and appropriate lending approaches to more viably lend to this sector. Of course, on the other hand, our MSME borrowers also have difficulty complying or just are simply intimidated by bank loan requirements, and they are unable to present strong business proposals. So this is the challenge in MSME financing as we see it is both a supply and demand side. There's a supply side and demand side aspects to it. So the BSP has identified 3 strategic intervention areas for sustainable MSME financing. And this is not just through the pandemic, but of course beyond the pandemic. And across these 3 areas, digitalization strategies were considered and is being implemented. First, of course, we aim to strengthen the credit infrastructure. And the key initiative here is the development of a credit risk database that aims to generate a robust credit scoring model designed for SMEs. And the scoring model is intended, of course, to enable our lenders to more confidently lend to SME borrowers without necessarily relying on collateral. Second, we aim to promote innovative MSME financing approaches. And in line with this, the BSP has been actively engaging our partners to facilitate technical assistance and matching grants for the digitalization of our last mile lenders like the rural banks and the microfinance institutions. We are also supporting supply chain financing development as an innovative financing approach, which leverages on MSMEs receivables and inventory flows, as well as their supply chain relationships. And the last but not least strategic intervention area is improving the bankability of our enterprises, MSMEs, and farmers. And to this end, financial literacy is crucial capacity building support as it enables them to make better informed financial decisions for their enterprise and personal finance. And in addition, we are also conducting policy research on promoting alternative data for credit scoring so that our credit invisible Filipinos will also be able to access formal credit moving forward. So I'll pause there and thank you very much.
Thank you very much, Joyce, for very comprehensive overview or presentation of approaches of the Central Bank of Philippines in digital financial inclusion. And now we move to another country experience, Australia. And we often hear that these issues of digital exclusion and financial consumer protection, financial literacy for vulnerable groups are mainly the issue for developing countries, emerging markets. But what about developed market? What about Australia? I would like to give the floor to Miss Laura Higgins. Again, Laura is a senior executive leader and consumer insights and communication at Australia Securities and Investments Commission, and very well known internationally as one of the leaders in financial literacy, financial consumer protection. We work together at the OECD International Network for Financial Education for have very good cooperation. So Laura, the floor is yours. But please also, we have organizers were very nice to us and give a bit more time, but still please try to be within our time limits.
No problem. Thank you, Anna. Thank you for that kind introduction, and I will do my best to just hit the highlights of my slides. Firstly, thank you very much for including me today. It is a great, it's an exciting time to be having these conversations. More than ever, we have so much to learn from each other with this shared experience and shared problem. So I've learned a lot in the presentations today, and I'll take these ideas back to my team. So thanks again. So if we go to the first slide. In Australia, as you said, you referred to, Anna, most people are online. So nearly all Australians have accessed the internet, but that doesn't mean that they have the skills and to fully participate in the digital world. And it's very likely that the way we're making financial decisions and engaging with our financial lives will be forever changed after this pandemic. So COVID-19 has made a difference to our online use, particularly for families as they negotiate schooling and working from home, and the impact of the initial COVID restrictions in 2020 and this year it was reinforced issues relating to digital inclusion and exclusion as services from health and education shift in whole or part to modes of automated and online delivery. The consequences of digital exclusion for some Australians are likely to translate into lost opportunities and restricted options for work, education, social connections, and will impact their engagement with financial services. There's been a lot of data collected over the last couple of years, in particular through the Australian Communications and Media Authority, the Australian Bureau of Statistics, and the Reserve Bank. And I'm drawing on a lot of their research when I put this presentation together. And though I'm focused on the individual, there have been significant changes to small businesses in Australia, with 1 in 4 businesses now operating as cashless compared to 1 in 12 18 months ago. So that's quite significant. And those issues of affordability, those barriers, as well as the safety, cyber safety concerns, are central to supporting digital inclusion in both of those populations. Next slide. Thanks. So there's been a change, the impact of the pandemic in Australia. So like I said, most Australians have been online, and access to the internet has improved in recent years with the rollout of a new broadband network. But there's been a lot of changes around payment methods, and in particular, looking at the impacts of the mandated lockdowns and social distancing limitations and the ongoing trading restrictions. So consumers and business behavior has changed significantly. There's been a big change in day-to-day payment behavior, and it's now going to be interesting to track if that will be ongoing, if it will continue to push consumers in a new normal direction. The pandemic has led to dramatic differences in the everyday life of an individual, and one of the key components has largely been affected has been how we pay for goods and services. So going back to 2019, the average consumer paying for goods and services could choose many methods, and many were operating with cash, and that has made a significant change. And it'll be interesting to see if we go back to using cash in Australia. So that has impacts for how people engage with young people as well, and talk to them about money and their financial decisions, that we have relied on having cash to explain and help young people understand money. And I think we've seen that really change. And I don't think we're going back to conversations about the value of money and people understanding that by having to see coins and dollars. Next slide, thanks. So I think we've just missed a slide. I'm sorry. Yes, thank you. So I said earlier something about the essential skills that people need. It's highlighted that the digital divide, this pandemic has highlighted the digital divide, and with social distancing policies across the country, it showed more than ever that people need to have the basic skills and affordable access to technology. So many Australians had relied on the internet for some important activities in their lives, like online banking and work emails, online education and entertainment. But in a very short time, a more extensive range of activities had to be moved online, and people have changed their behavior. So rapid digitalization means that affordable digital access and digital skills are paramount for what's next. And while the full impact of the pandemic on Australia's digital divide is not fully evident in research to date, we do understand there are some access issues. We do know that older Australians are behaving differently. There was a reliance on face-to-face service, in particular in the banking industry. That's changed significantly. And in the last year, people over 65 have actually conducted more banking online than the younger cohort, which has been quite interesting. And I think we'll have a long-term impact on what face-to-face services might be available. Lots of us are engaged in really important work that the OECD is leading to better understand the importance of bridging the digital divide and delivering inclusive digital transformation. And we understand that we really do need to have this as a very important an important rock, if you will, in our policy development programs going forward. Next slide, thanks. During the pandemic, the rate of people completely offline fell from 10% to just 1%. However, less than 40% of Australians felt confident they could keep up with the rapid pace of change in technology. I felt that myself when I was trying to put that background in my Zoom meeting. I wasn't quite sure how to do it. And this is something that I've been doing every day for many years. But we certainly know that there are many at-risk groups in Australia, and they include First Nations people. So in remote First Nations communities, 30% of people have no household internet. Rural and remote Australians, even with the rollout of the national broadband network, only a third of Australians' land area has mobile connectivity. Low-income households and those with mobile-only data connection are often excluded. Women with low digital literacy may be more vulnerable. New immigrants and refugees with low digital skills and access, there are barriers there. People with disabilities, those 65 years and older, people outside the labor force, so confidence in that digital skills is an issue, and people with low levels of education also. So as a community, we're now planning, the economic And we're rebuilding after the pandemic, and digital inclusion has to be an integral part of that planning. Next slide. The main factors that we're considering, again, are affordability and access. With the increased demand and usage of data, Australian households are spending more to stay connected. During COVID-19, individuals and small businesses did have suffer greater debt for digital services. That increased, and that was on the back of a period of decreasing. So while the cost of internet access has reduced and overall relative household expenditure on telecommunications is comparable between 2019 and 2020, for low-income households, the proportion of income spent on internet access has increased every year since 2014. And a survey of low-income households saw half of those with a home internet connection had difficulty paying the costs associated with that service. So change in the space, in living in a pandemic environment, will need to take those costs. That access and affordability needs to be at the center of what we do when we're designing interventions going forward. Next slide. Thanks. So what are we doing in the consumer education space, and what have we seen on MoneySmart, which is our consumer education or financial literacy tool at ASIC? We've seen a sharp increase in people engaging with ASIC. So 10 million Australians visited MoneySmart last year, and that's 1 in 2 Australian adults. We have changed a lot of what we're doing on MoneySmart, including responding to the change in audience. More young people are coming to MoneySmart. We often spoke to young people through adults, through intermediaries, through teachers. Now we're speaking more directly to people under 18. So we have new tools that are in development. For instance, we have a sophisticated budget planner, which is one of our more popular tools. And now we're looking to say, how can we adapt that? So a younger person at 16 and 14, for instance, can access that and find that useful. That information can be more aimed at them, because in the pandemic environment, what we found is that much more of that learning was self-directed, and now we have a much different audience for MoneySmart. In fact, we just recently, this week, launched MoneySmart Instagram. And so we have to watch the space and see if a more younger group is coming to MoneySmart for as a starting place for financial information. What we found in the last year is that there was a lot of activity in our mortgage calculator. More than ever, individuals were looking at the financial services that they had and to see if they could get a better deal, if it was right for them, if they could take advantage of low interest rates. So there was significant activity there. We worked very closely with the banks when there were hardship arrangements in place, and to help people find and connect with information they needed if they were struggling with their finances. And also working more closely than ever across government to make sure that people had one place to go to when they were making financial decisions. So MoneySmart continues to be an important resource in Australia for individuals, and we're continuing to work collaboratively across government and to respond to a changing and growing audience. Thanks, Anna.
Thank you very much, Laura, and thank you for being in time. Unfortunately, organizers say that we do not have time for questions. It's a pity, but we had really insightful and in-depth presentations from different perspectives and different countries. And I think that these interventions gave us also insights how to move to this new, more inclusive financial normal. And we obviously see that we need all ingredients. At least we need 3 key ingredients. First, responsible financial providers, financial practices, and it was a good example of Indonesian FinTech Association. We need updated, adjusted approaches to regulation, to supervision and initiatives. We saw the examples of Philippines, and we obviously need the capable consumers and financially capable responsible consumers and informed. So we also saw this example of Australia. Thank you very much for that. This discussion is not over. We have the whole year of Indonesian G20 presidency, and hope we will have many opportunities to discuss these issues further. And by saying that, I'll give floor back to, I think, to Florent Messi.
Thank you very much, Anna. I'm not sure if our MC is doing a transition here, but otherwise I'm happy to continue up with the closing.
Okay. Thank you, Anna. Okay, once again, please give applause to our moderators and also our speakers for this panel discussion. We are very great. We can have, you can share the new thoughts, the new perspective for us. So it's going to be useful for all participants and audiences here in the future. Once again, thank you so much, our moderator, and to our speakers. Okay, distinguished guests, ladies and gentlemen. So now, in order to take a documentation for our conference, we would like to invite Ms. Flor and Messi, Mr. Tirta Segara, Mr. Sarjito, and also Mr. Diki Wijaya to take a picture together. We will take a picture in a countdown, so please prepare on your position. So everyone's on your position already. Countdown from me. Okay, so we have Ms. Flor and Messi, Mr. Tirta Segara, Mr. Sarjito, and also Mr. Diki Wijaya for this photo session. Okay. I'll stand by in position. Okay, still need a few seconds for the preparation. Okay, ladies and gentlemen, we are very glad for this today's conference. We have for a panel discussion from yesterday until today. It's really great to have a new and a fresh perspective and thoughts from our panel discussion for this conference. Okay, now we prepare our photo session. So Ms. Flor and Messi, Mr. Tirta Segara, Mr. Sarjito, and also Mr. Diki Wijaya are in your position. Okay, great, perfect. Okay. So count down by me in 3, 2, 1. Say cheese. Wow, perfect, excellent. Once again, give applause to Ms. Flor and Messi, Mr. Tirta Segara, Mr. Sarjito, and Mr. Diki Wijaya. Thank you for joining us. Okay, and distinguished guest delegates, ladies and gentlemen. So next, we have come to the end of this event. But I would like to invite Acting Deputy Director of the Directorate for Financial and Enterprise Affairs, OECD, Ms. Flor and Messi, to give her closing remarks. So please welcome Ms. Flor and Messi.
And thank you very much for this very kind introduction. And I have to say, congratulations on the Indonesian side for the really brilliant technology. Hybrid meeting, I know for sure are not easy to organize. So it's been wonderful these 2 days. So a big thank you from the bottom of my heart, because it is tough and it's really good to be able to organize those kind of meetings in those times of pandemic. Well, in terms of closing, obviously, I want to start by thanking very much OJK for this outstanding conference, and of course, Her Excellency Sri Mulyani Indrawati, Minister of Finance of Indonesia, for a keynote address yesterday. I would like also to thank the government of Japan for its continued support and contribution to this event. Thanks to all the keynotes, the panelists, the excellent moderators, the master of ceremony, you've been exceptional, and of course, all the attendees. I'd like to really mention that we have an exceptional actually attendance at this meeting with over 1,500 people actually listening to this and actually actively contributing to the discussion with some questions. So this really reflects the importance of the topic that were discussed during these 2 days. So again, thank you very much for this hybrid format. It worked very well. In terms of wrap up, I just wanted to reflect and remind a few things that we have been discussing over the last 2 days. First, on financial consumer protection and on the high-level principles that are being reviewed. We heard yesterday from Her Excellency Minister Sri Mulyani Indrawati about the importance of strong financial consumer protection. We also explored in session 1 developments and approaches relating to financial consumer protection in the context of the review of the G20 OECD high-level principle on financial consumer protection, which are really the leading international standard in this space. In particular, we heard about the policy trends and areas that have developed and are emerging since the financial consumer protection principle were first endorsed 10 years ago. This includes, of course, the lessons learned from the response to the COVID-19 crisis, the developments of digitalization that have been mentioned many times in these 2 days, access and inclusion to financial products and services, enhanced protection for consumers who may be most vulnerable, supporting financial well-being, which has been now a key in the economic recovery, and aspects related to sustainable finance. So we are very committed at the OECD, of course, and through this year, the Indonesian G20 presidency and the Global Partnership for Financial Inclusion to support the review of this very important principle. Now, coming to elements on financial resilience and well-being that were also discussed. Obviously, the COVID-19 crisis has hit in full force many economic sectors and many households in Asia and globally. The crisis shed a new light on the need to focus on individuals and household financial resilience. We have heard that household finance are still heavily affected almost 2 years into the crisis, with rising levels of borrowing and growing exposure to online financial fraud and scam. Panelists from Indonesia, Hong Kong, and New Zealand have discussed the importance of adapting policy responses to the evolving context, keeping in mind the ultimate goal of individual financial well-being. The importance and the role, of course, of global forum, the OECD International Network of Financial Education for Financial Literacy, and the Global Partnership for Financial Inclusion were also reminded. Financial consumer perspective on COVID-19 measures. This was the session this morning. It was the highlights and the importance of supporting financial consumers through the COVID-19 pandemic through a coordinated, holistic, yet flexible approach. Examples of measures such as loan restructuration in Cambodia and default of payment in Malaysia, as well as really important work on trying to tackle cybercrime in Indonesia were actually put forward. Importance were really focusing on gathering financial consumer protection perspective, getting the consumer approach right, and typically making sure the policy design is right. So we've learned a lot from this research, and I remind you that the OECD is conducting research currently into the experience in Cambodia, Indonesia, and Malaysia. Digital aspects that were just discussed are critically important. The financial system, and all the speakers have mentioned that, is becoming more digitalized, and it's likely to continue, offering new opportunities, obviously, but also more risk. Example of how the digital and fintech sector can help to overcome the crisis have been given. Importance to identify the emerging risk, as shown by many panelists actually in a variety of sessions, and the importance, again, of digital financial literacy in this regard. More and more countries are shifting towards digital financial education as a matter of needs, plus also devising ways of not leaving behind people with limited digital access and skills. So we don't want to be into a world of digital exclusion. Stepping forward, The OECD is committed to support the G20 Indonesian agenda to recover together, recover stronger, a very good motto. As emphasized by Excellency Sri Mulyani Indrawati, it is important not to leave any country, anyone behind. The three pillars mentioned for the G20 presidency, promoting productivity, notably through digital transformation, enhancing global resilience, and ensuring a sustainable and inclusive growth. All of these are key overarching elements to support a strong and inclusive recovery. The OECD is really looking forward to working with the G20 Indonesian presidency and the Global Partnership for Financial Inclusion into next year. In particular, we look forward to progressing the review of the G20 OECD high-level principle on financial consumer protection. As we heard yesterday, they remain as important as before and well implemented by countries around the world. But they also need to be reviewed to ensure they continue to reflect best practices and are looking forward. We look forward to continuing to engage with participating countries on the review, including Indonesia, of course, and any other countries in Asia and the Pacific. So we look forward to working the G20 Indonesian presidency and the GPFI as we progress the review and seek endorsements for updates to the principle in due course. We are also actually working on revising the OECD INFE toolkit for a new coordinated measurement exercise on the financial literacy of adults in order to track the evolution of financial literacy, but also an increasingly financial resilience and financial well-being with respect to pre-pandemic levels. We want to also follow up work on the financial literacy and digitalization of MSME, following the report that was issued for this year presidency on a report on navigating the storm, MSME financial and digital competency in COVID-19 times. So we will try to enhance the data collection that have been done through this report into 2022. And last but not least, we are also in the process of finalizing and publishing guidance on digital delivery of financial education. Conferences such as this one remind us of the importance of international cooperation and data gathering and sharing. In this regard, we look forward to continue and deepen OECD collaboration with our friends and colleagues in Indonesia. I have to tell you, as a personal note, that I used to go to Indonesia every single year, and I really miss the fact that we are only able to do this virtually. But I really hope that in the next year we'll have an opportunity to come back together and to be together in the beautiful country of Indonesia and its many islands. So now it's time to let me give the floor to Mr. Imashia, Deputy Commissioner of OJK, Institute and Digital Finance at OJK Indonesia, for his closing remarks. Thank you very much all, and I hope, as I said, to see you in person very soon.
Okay, thank you very much. Please give applause to Anne. Once again, thank you for your warm closing remarks. Distinguished guests, ladies and gentlemen, next, moving right along, we will continue to the closing remarks that will be delivered by Mr. Tirta Segara, member of the Board of Commissioners of OJK, in charge of consumer education and protection. Please welcome Mr. Tirta Segara.
Thank you, Tiffany. Your Excellencies, Ibu Sri Mulyani Indrawati and Pak Wimboh Santoso, our distinguished panelists, moderators, notable representatives of OJK, government agencies and financial services industry, esteemed officials of OECD and financial regulators around the world, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. A very good morning, good afternoon, and good evening for those on the other side of the globe. It is my great pleasure and honor to join you for the closing of this OJK-OECD conference on the financial inclusion, financial consumer protection, and financial literacy in Asia and the Pacific. It is a sad task for me because we shall be closing the door when lively and stimulating discussions is still there, as well as bidding farewell to friends and associates. On this occasion, especially to the Organization for Economic Cooperation and Development, OECD, for their collaborative work to make this event a successful one, as well as the government of Japan for their continued support and contribution. I also greatly appreciate all speakers and moderators, as well as all participants who have kindly spent the time from their busy schedules to share their views and experience with all of us. I'd also like to congratulate the organizers on running this seminar perfectly. During the last 2 days, we have engaged in policy and regulation discussions. Perspectives and international best practices have also been captured. This is truly a momentous event and a real manifestation of OJK's commitment to developing financial inclusion, financial consumer protection, and financial literacy, especially during the COVID-19 pandemic. So on behalf of OJK, it is indeed my pleasure to make a few closing remarks and express gratitude to all who made this event a reality. Honorable guests, ladies and gentlemen, as we all know, the outbreak of COVID-19 and its rapid spread across the world has created an unprecedented health and economic downturn, affecting countries, individuals, families, and communities. The COVID-19 pandemic has underlined the importance of more effective financial consumer protection frameworks to ensure responsible and fair treatment to consumers. In the first session of this conference, the panelists have shared overviews of the G20 OECD high-level principles for financial consumer protections, which mentioned in communique of the G20 finance ministers and central bank governors meeting during the Italian G20 presidency. It is also underlined by Her Excellency Ibu Sri Mulyani on her keynote address yesterday. All panelists also present on how the financial consumer protection principles have been implemented in their jurisdictions, as well as recent initiatives taken during the COVID-19 pandemic. During the pandemic, consumer protection and market conduct have been pushed to be the national discussions. It is inevitable for regulators to continuously develop and strengthen their policies. In addition, pandemic also accelerated the adoption of internet-based services. As a result, many financial products are being offered online. Sadly, some consumers have become fraud victims. Therefore, consumer protection becomes a very important issue. Consumer protection can be carried out both preventively through increasing public financial literacy, as well as curatively through handling financial consumer complaints and market conduct supervision. Honorable guests, ladies and gentlemen, the COVID-19 outbreak also highlighted the need to focus on households' financial resilience. With regard to the accelerated digitalization during the COVID-19, the issue of digital financial literacy becomes increasingly important and become our main topic in the second session of the conference. In this session, the panelists underlined the role of digital financial literacy as the main driver of digital financial transformation. Digitalization indeed offers many benefits. However, it also presents potential risks that need to be addressed proportionally. In addition, we also discussed OECD INFE report on supporting financial resilience and transformation through digital financial literacy. that contains some effective approaches on how digital financial education can support financial resilience. The panelists also discussed the role of digital financial literacy and personal data protection to strengthen financial consumers' protection. They also underlined the importance of digital financial education to support financial resilience in many countries or jurisdictions. Honorable guests, ladies and gentlemen, on the third session, the conference discussed how the COVID pandemic has brought an adverse impact to personal financial situation. The range of financial consumer support and policy measures, as well as consumer experiences, have been discussed and elaborated on the third session. Panelists have shared current issues on financial consumer protection and market conduct supervision. Behind the risk in using digital financial services, there are opportunities and challenges in advancing digital financial inclusion in the midst of the COVID-19 pandemic era, which became the main topic in the last session. As part of the global response to COVID-19, the digital financial industry has been playing a key role in providing services and innovations that have been mitigated the disruptions brought by the pandemic. This session also discussed various efforts and strategies in the implementation of digital financial inclusions for individuals or MSMEs in relation to COVID-19 responses. Honorable guests, ladies and gentlemen, the importance of financial inclusion, financial consumer protection, and financial literacy for financial stability and inclusive development is globally acknowledged. The high-level principles which have been endorsed by G20 leaders also recognize that these instruments are essential to reinforce the financial system and enhance the financial well-being of individuals. Indeed, improving financial inclusion, financial consumer protection, and financial literacy have been a policy priority in many countries and become a global movement. However, it is important to note that those works are our shared responsibility. Such mission is going to be successful as long as all stakeholders give adequate attention and work in their proper field respectively. I hope this conference will provide great opportunity and valuable knowledge for all of us and how it could help accelerate economic recovery and make financial industry more sustainable and inclusive in our respective jurisdictions. Having said that, let me conclude my remarks by once again offering my sincere thanks to our honorable guests, speakers, and participants, as well as the organizers of this event. My appreciation and sincere gratitude to OECD and the committee for their continuous support to our event. The event, which lasts for 2 days, was very successful, delivered by panelists from 12 jurisdictions or countries and attended by more than 6,000 participants from 74 jurisdictions who actively participated in this event. I wish you all good luck in your endeavors, and I certainly hope that together we can contribute to the development of financial literacy, financial inclusion, and financial consumer protection. Once again, thank you very much. Thank you for your attention, and let me return this floor to the MC. Thank you.
Once again, please give applause to Mr. Tita Segara. Thank you for delivering the warm closing remarks, very remarkable closing remarks. Distinguished guests, speakers, delegates, ladies and gentlemen. Finally, we have come to the end of this conference, so we have to close OJK-OECD conference. On behalf of the organizing committee, we thank you to all moderators, to all keynote speakers, panelists, OECD members, and all participants for participating in the OJK-OECD conference. Thank you once again. Your participation made this discussion very interesting, diverse, comprehensive, and inspiring to all conference participants. Please enjoy the rest of the day. Look forward to see you soon. Stay safe and good afternoon from Jakarta. See you next year. Thank you very much.